So thank you again for joining me in today's session. And my co-host is Abhishek Hiremat, a good friend of mine, a great trader, and a data geek like me. My name is Vijay. My pseudonym is Sainik. The reason why it is so is twofold. One is I'm from Sainik School, Bijapur in Karnataka. Second is that I used to be a regular contributor in Money Control Message Board in the early 2000s. And there they encouraged us to have a pseudonym, and Sainik was my pseudonym. When I came onto Twitter, I had kept my own name, Vijay, but quite a few of my friends suggested that we know you better as Sainik, so you revert to that. So my name is Vijay. You can see me. I'm not an anonymous ID. You can see my photograph there. And so Sainik is what I would like to be called as. But on Clubhouse, I am Vijay. So a brief background about myself. I am an engineer from Bangalore University. I did my master's in management from Jamnalal Bajaj Institute of Management Studies in Mumbai. I worked for 3 years in advertising. I was with Ogilvy Advertising in Bangalore and Chennai. And I used to handle Titan in Bangalore and Ponds in Chennai. Subsequent to the unfortunate assassination of Rajiv Gandhi, I jumped into the stock market because I saw the 1991 budget talked about liberalization. So I saw I'll take a chance. I had no knowledge about stock broking per se. I was an investor since my college days, since 1982. But nevertheless, I said, let me make a career. Hopefully, there should be something in the capital markets. And I jumped in October 1991. So I had the privilege of seeing the Harshad Mehta boom, and also privilege of meeting Harshad Mehta after the scam. I started at a very low level as a sub-broker to a sub-broker. I didn't know much, so I learned the ropes through the hard way in Madras. And then I became a sub-broker and went to the floor of the Madras Stock Exchange. And then a couple of my friends had wanted to apply for NSE membership. And because I had experience, they roped me in. And so I managed their company, their firm for about 25 years. So we had branches in Mumbai, Bangalore, and Chennai. So I managed it for them. And over a course of these 20 plus years, we interacted with more than 10,000 clients. And I was mainly an investor. I became a trader somewhere after we started NSE, because there was not much of trading we could do on the floor because the brokerages were 2%. So 4% would go in only, the brokerage. So that was how I started. My understanding of technical analysis started in 1993 with the book Robert Pritzker's Elliott Wave Theory. And then I looked at various books of technical analysis. Those days, there were no packages, software packages, so we wanted to actually do it on a graph sheet. So I actually drew the lines of the closing prices on the graph book, and that's how I learned, and that's how my generation of people learned. So that is briefly my background, where I am a creature of the market, so I breathe, eat, drink, sleep markets 24/7, 365. So I have been doing these sessions on Clubhouse mainly because I find that infrastructure much better. But it's okay. I mean, let's take a chance, is what Abhishek told me. So here I am. My sessions in Clubhouse are usually of 2 hours. The first 20 to 30 minutes is where I speak continuously, and then we throw open the discussion, the room for varied points of view. I definitely encourage people to have a contra point of view to me. I like dissent because I am a dissenter, so I like dissent. And so long as we are, we dissent without being provocative, it is perfectly okay. We all learn because nobody can claim that we are a fountain of knowledge. So we'll have the discussions and Q&A after I finish. So I want to have the same format here. Now, coming to the topic, market may Tandav Hoga. Now, many people use an assertive language. They say Tandav Hoga. But I, being the old school, we always have a question mark. We say possible, probable. It is not definite. Nothing is definite except life, death, taxes, and postponement of LIC IPO. Apart from these 3-4 things, nothing is definite. So, my topic today was, can we question this? Because I think we are at a critical point. So we have bullish arguments as well as bearish arguments. People talking about it taking off from here. There have been CNBC arguments. We talk of we are in the 2003 to 2007 situation. And then we are a small band of the contra guys like me, Abhishek, and Vipin, and Sharad Bhai, and a few others who are in a minority as far as the vocal minority, we could say that. Okay. So I have tackled this question in 7 parts. I'm raising 7 parts. It's a 7-part, talk. So we have generally we have 3 kinds of situation in the market. Either it's bullish or bearish or sideways. Tandav can happen only if it is going to be very bullish or going to be very bearish. So right now we would assume that we are in a stable market. We are in sideways market. Now whether in a bullish sideways, bearish sideways, that is the question. So I will touch upon briefly bullish and bearish arguments, and then these could be this could serve as discussion points. And while these points are not exhaustive, but this may give us a chance to explore new perspectives as we go along. Okay, let's take the bullish arguments first. Okay. The first argument which is propagated by bulls is the overall economic indicators are good. There's moderate inflation as far as government and RBI says. We have got good tax collection. Today we got GST data, which is a record, and we have stable government policies. The foundation for any bull market is economy should be good, economic indicators should be good, inflation should be good, and tax collection should be good, and stable government policies. Fantastic. The second thing which the bulls will, let's say, propagate, or let's say would like to postulate is corporate results are good, and EPS is going up, and so it is a bull market. The third major argument which we see regularly is even though FIs are selling for the last 8 months, the mainline indices have just dropped less than 10%. So, and since FIs are selling primarily in the Nifty and Bank Nifty components, so and yet the indices have dropped only 7 to 10%, less than 10%. So FIs are technically irrelevant to the market because we have got a third leg of the stool. We have previously 2 legs, which was one was the DII, one of the FII. Now we have added a third leg of the stool, which is the retail investors. Whether you call them Robin Hood investors or just long-term retail investors, these are the people who have come into the market and who are holding the market up. So we don't need FIs. If FIs come, let them buy. If they sell, we don't care. So that is the argument put forward by the people who are bullish. The fourth argument is now whatever FIs have sold, DIs have been absorbing, and on many days we have seen DIs have been bigger buyers than the FI sales. We have also have a new class of people apart from the retail investors who are these AIFs. We have this small cases which are there, which are actually the retail investors which are participating. Then we have this PMS. So an argument is put forward by the bullish bulls, I would say, is that why are you worried? Now we have widened the market. You look at the number of demat accounts which have been opened, both in CDSL and NSDL, and you are seeing a flattening of the curve in that sense that more and more people are coming into the market. They're more knowledgeable. Today, so many seminars, webinars are conducted, and so many programs are there, which was not there in the previous, let's say, decade or 3 decades. So we have grown. And therefore, and in terms of volumes also, NSC is one of the largest exchanges in the world, and in derivatives, we are number one. So all is hunky-dory. So where is the question of feeling bearish at all? Okay. Then we talk about, in terms of, as I said, liquidity. Liquidity is one factor which drives the markets apart from fundamentals. And liquidity is plentiful because the government of India is willing to, let's say, pump in liquidity through fiscal measures. RBI is looking at having, let's say, a loose kind of liquidity, including the recent RBI meet. They did not, what shall I say, tamper with the plentiful liquidity stance, even though many of us expected that they will tighten some part. They have not done that. Okay, so therefore, you have these five parameters on which the bulls can argue. The sixth one, which is of very latest parameter which has come, is the Ukraine-Russia war. Now, again, if you look at the newspaper articles, or if you talk to people who are knowledgeable, or on the television, you invariably have, we are relatively insulated from the global developments, because after all, Russia and Ukraine, they are in Europe, and if anything, Europe may get affected, then the US may get affected somewhat, but finally, India will be the last people to get affected. And we are very clever. We have taken a stance which is neutral. So neither are we on Russia's camp, or neither are in Ukraine's camp. So we are safe. So therefore, you need not worry about the effect of the Ukraine-Russia war having any major effect on Indian economy. So this is the sixth one. And this I would like to dwell in detail when I go to on the bear side and see where their arguments are. So this is overall argument on the bulls as of now in terms of distance and in terms of the stance which we are taking. The final thing is you look at all the gurus on the what shall I say, social media or the mainstream media. They're all uber bullish. I have not seen any major guru, and the gurus are plenty, and I respect a lot of them, and I know a lot of them personally, and I've personally met a lot of people, a lot of these gurus. Of course, I am just one ordinary soldier. That's why Sainik is a soldier. But all of them are wise men, genuinely wise men, and they know much, much more than I do. Correct, economic indicators are suspect, in my opinion. When the government of India says we have a 6% inflation, on the other hand, they say we have a WPI inflation is 13%. It is ridiculous, in my opinion, to have such a huge gap between CPI and WPI. And I go to buy vegetables every day, and I realize that nothing has changed. When I go to buy groceries, and something great has changed, and the prices are not 6% up. If I go to petrol, if I go and buy petrol, in every factor, I believe that our inflation is much more than what the numbers are saying. Of course, all governments manipulate inflation numbers, so it is not new. It's happened in India through the ages, and it happens all the time, even in the US and other countries. But in terms of relative inflation, I still believe that 6% is still too low. And now we're talking of GDP numbers. Yesterday, GDP numbers came. They were much below expectations. And when we talk of GST, GST is good till now, but corporates are struggling. So therefore, we may have a lower GST. And in my opinion, which I've been pontificating for last 8 months, is that we are entering stagflation. And the way commodity prices are going up and not coming down, sticky inflation, probably will go into something called a hyper stagflationary economy. Stagflation, as we know, is stagnant growth, high unemployment, and high inflation, which we saw between 1992 and 2000. And now you are, I think, going to witness that, or we are part of that. Stagflation is bad for the capital markets. I remember for the first 12 years, between 92, when we hit 4,500 on the Sensex, we were still at 4,500 in 2004. 12 years, we saw 4,500 many times. Though we saw more than 4,500, we went up to 6,000 in the 99-2000 year, but we came back swiftly to 3,000. And so if somebody had shorted index Sensex future of 4,500, he could have covered into 12 years later at the same price. So that is the kind of situation we were in, because we were in stagflation. And 1992 to 2004, we had enormous amount of what shall I say, development in every single field. I have outlined it somewhere else, but so we'll come back to that later. Then we are talking, second one is corporate results are good. In my opinion, corporate results were good. Going forward, inflation, which is sticky, will cut margins. Already FMCG is complaining. There are a lot of other companies which are complaining. So I suspect that inflation will eat away and cut the margins for all corporates, and we will end up with lower EPS through the year. Incidentally, in 2008, the earnings were good in the entire year of 2008, yet the stock markets fell 65%, and we blame Lehman. Lehman Brothers got nothing to do with us, subprime nothing to do with us, yet we fell 65%. HDFC Bank also fell nearly 60%, and the mother of all markets, US, fell about 54%. So our markets, when they fall big time. So one has to keep history in mind. Then the third one is about indices just being 7 to 10% lower. If you look at it, they do not show the true picture. I have detailed it many times through my Twitter thread, where so many stocks in the index itself are down 15 to 20%. And if you put your hand on your heart and look at your own portfolio, you will see that your stocks, many stocks in your portfolio, are down 20 to 50%. So this 7%, a 7% drop in index is as good as your 6% inflation. Both of them look good on paper, but in reality, it is something else. So that is as far as your corporate sector and the indices are concerned. And in terms of DIIs and the retail holding of the market, if you look at history, in 2007, FIS started selling somewhere in October, November, December, and January 15th. Till January 15th, the markets held on, and we made new highs. Globally, markets were dropping. All-time highs were done for more countries, most indices from somewhere from July to December of 2007. Whereas India was the only country, apart from maybe Brazil, only country of note, I would say, where our indices were going up every single month, despite consistent FIS selling, which we have seen somewhat similar. So even at that point of time, people said India has come of age, India is the flavor of the season, it is the flavor of the world. We don't care. We don't have, the subprime. We don't have these Bear Stearns or such companies. We should not get affected. So finally, we know what happened. And there is a talk also of DIs buying heavily to prop up the market for the LIC IPO. I don't know how far it is true. I don't believe in these conspiracy theories. But nevertheless, there is a non-mutual fund quantum of buying, which you can see in the SEBI database, which is fairly large. And when you say non-mutual funds, and if you take institutions non-mutual funds, then it invariably has to be LIC. Nevertheless, today we are hearing that LIC IPO is most likely to get postponed. That's what the FM is saying. She's thinking of it. And coming to the third leg of the stool, non-institutional money, we have seen non-institutional money is very fickle. When the going is good, it comes, and when the markets come down, or the economy is not doing well, or small industries are not doing well, then they redeem. And redemptions in 2008 continued up to 2010. So there is a possibility that what we are thinking may not last for a long time. So now I'll come to the sixth point, which is the Ukraine war. Bulls are saying that it's far away and we are neutral, so it doesn't matter. Now, everybody is looking at the military angle, and everybody is following as to what is happening on a day-to-day basis. I always look at the economic angle. Now, if you look at the economic angle, you are seeing sanctions after sanctions coming from various countries, which on paper look very good. They look very brave as to what they're doing to Russia. If you study the history of World War II, then you'll know what kind of country and countrymen Russians are. And we will have a discussion later on that. But needless to say, I think what you're hearing the news is only of what the West is doing. Russia has still not shown its cards, and they're keeping it very close to their chest. They have not really put any kind of major sanctions, and they can do. The major one they can do is oil and gas, and which can destroy Europe if they want to. But right now they're not done that, and let's hope that they're not going to do that. But nevertheless, let's look at the economic angle. Many of us may not know that sunflower oil imports for us in India come from two countries primarily. 90% of sunflower oil imports come from Russia and Ukraine. So that's a huge amount of a concentrated amount coming from two countries. So just remember, 90% of sunflower oil imports come from only two countries, Russia and Ukraine, both of which are engaged in a confrontation. I keep telling you that the sanctions will not only hurt Russia, but all of us under what I call the collateral damage. Now, nobody's talking of the collateral damage. I gave you an example of the sunflower oil. And if you really look at the Russian partners, who are their top 5 partners, trade partners, you'll be surprised that Germany and USA are the top 5 trade partners. So you are having USA as a large trade partner. USA does not get oil from Russia. It does not get gas. So it gets other products and it exports other products to Russia. So now one has to go down, drill down and find out what are those. And then you will be surprised as to how much the US economy will be affected if they are going to put sanctions. Today we are talking of Apple's app not being allowed, Google Pay not being allowed, Swift being stopped. All this look very nice, bravado in the first few days, few weeks. I come from a school where at least 500 of my friends are in the armed forces, and from my own class, more than 10 people are in the armed forces. Many of them fought the Kargil war, and I know firsthand how difficult it is to fight a war. In the initial stages, everybody will say "Ra ra ra, fantastic, Jai Jawan," and all that. But when you go into the battlefield, things happen, and they will just continue for a longer time than what one expects. So if somebody is going to tell me this war is going to end in 4 days, I have got Taj Mahal to sell to you at a discount on Amazon. So I'm a battle-hardened guy in that sense. So I think people are let's say what shall I say taking it very lightly. Now many of you may not know that Russia produces 10% of the global oil, 10%, and it's the world's largest supplier of wheat and corn, fertilizers, palladium, nickel. It is the 3rd largest exporter of coal and steel. It is the 5th largest exporter of lumber. So just imagine if you are going to block all of this. Obviously, when they are exporting so many commodities, and somebody somewhere will get hurt, it is very visible. The markets, especially the commodity markets, the equity markets are the dull dumbos. They will always get to know about last. They are the last benchers. Not even last bencher. Last benchers are smart. They are somewhere in the middle benchers or the first benchers who will be very theoretically calculating something, but at the end of the day, when everything falls apart, then the equity markets will panic. So we believe that Abhishek, me, and Vipin, and some of other friends, that when we panic, we'll panic hard. So one needs to be aware of that. Now, in terms of India, we have defense. 50% of our defense imports come from Russia. Russia's 23% of exports, military exports, go to India. So we are entirely dependent on Russia. For instance, in terms of the Air Force, especially, we are hugely dependent. So we will be weakened if Russian sanctions go on, because Russia will not be able to send anything to India. So we need to be very careful there. And as I said, majority of the IAF fighter squadrons, 272 planes, are coming from Russia. So that is one. So where are we going to get hurt? One is oil and gas, ONGC, Oil India, IOC, BPCL. We have about $15 billion investments in Russia. And we also have edible oils, I mentioned. Fertilizers is one big thing which we import from Russia. and technology, which people don't talk of. Infosys is a development center in Croatia and Moscow. Tech Mahindra has got a development center in Belarus. Wipro has got a subsidiary in Ukraine. And all the tech talent is sitting in Kiev, Kharkiv, and Lviv. Today, you are hearing the word, the names of Kiev and Kharkiv. They are being bombed relentlessly. So you will have to dig deep and find out. I couldn't really get much information. I spent about 6 hours today trying to collect as much information as possible for this 30-minute talk. But I could get this much information. I will add on as I go along tomorrow and the following days. But just remember that we are dependent in defense, edible oils, and fertilizers, and our tech guys are sitting in these countries. So there could be many, deals which we may not know, which are cross-border deals. Let's say we're doing work for BP. BP is moved out of Russia. We may be doing projects for BP in Russian installations, and now those projects will just vanish. So there could be wheels within wheels, which we are not aware at this point of time. But tech is one sector I'll be very, very, very carefully watching it. So I would think that we need to really not believe that we are far away and we are neutral. We are not. We'll get affected in a very, very big manner. And finally, about the base technical analysis. As I said, the gurus are all saying it's up. And my experience with technical analysis is only since 1993, though I started my, let's say, foray into the capital markets in 1991. So I know basics of technical analysis. I am not a great guy in technical analysis. I only know in bull market, we have higher high and higher low. In a bear market, we have lower high and lower low. If you look at the chart, for me, I'm able to see a lower low and lower high since October 19, 2021. Maybe my eyesight has to be tested if it has been proven wrong by the technical analysts of the bulls, but that is one point. The second thing which I look for is that, distribution and accumulation patterns. And if I look at it, there's so many distribution patterns like head and shoulder, which I'm able to see. And the third thing which most technical analysts will see is that in a bull market, volumes are high on rise and low on falling. And in bear market, exactly opposite happens. And if I look at the charts with volumes, I'm seeing volumes are low when they rise and volumes are high on fall. So in my opinion, in my dictionary, it is in my, let's say, way of looking at things, I believe that we have seen lower high, lower lows. We are seeing low volumes on rise and high volumes on fall. So that is the second characteristic of a bear market. And a bull market, we have slow accumulation. And in a bear market, we have rapid distribution, which is also visible for me. And finally, all this, people look at moving averages. And if you look at moving averages, the mother of all moving averages, which people say differentiates a bull and a bear market, is a 200-day moving average. If you really look at, I look at more 100-day moving average to, plan earlier. And if you look at 200-day moving averages, Nifty and Bank Nifty are both trading below the 200-day moving averages. You have Nifty Private Bank, FMCG, Pharma, Realty, Media, CNX 100, 500, Junior, Mid Cap, Small Cap, all trading below 200-day moving average. The only 4 sectors trading above the 200-day moving average are energy, metal, public sector enterprises, and everybody's favorite now, PSU banks. On the borderline, we have autos, IT, and infra. So we are sitting at knife's edge in most of the indices. I believe that the tander will happen on the downside rather than the upside. Of course, as I said, between me and Vinay and Abhishek and all, we are very, very few people who are thinking that tander will happen on the downside, whereas the majority of the people, overwhelming majority, are thinking it will happen on the upside. I come to the end, exactly 30 minutes. Now I throw open the room for a discussion and let's say question answers. I will answer only if they're directed at me. I would rather not want questions. I would rather want some positive discussions to come. And as I said, we may have disagreements. So long as we are not disagreeable, it's very good to have, to be in this room and participate. May I request everyone to put forth their points. Abhishek is now the boss. Abhishek, I don't know much about this moderating here. May I request you to take over and help me out? Thank you. Thank you, everyone, for bearing me for 30 minutes. This is the first time I'm coming here. So hopefully you learned. I have learned a lot in the last 6 hours. I hope you have learned something from what I mentioned. Thank you.
Sainik sir, thank you.
Thank you, sir. That was. Let me just. Okay. Go ahead. Experiential.
Yeah, so thanks, Mr. Abhishek. You allowed me to speak. I had a question for Sainik sir. Whatever arguments that you make right now, they feel very credible, and it seems like whatever he has said, that is about to happen. But I wanted to know, were you having similar estimates when the COVID struck? And because that was the time many people missed out to ride the rally. So this is just curiosity, because I entered in March 20, in May 2020 in the markets, and I had my relatives who stayed in cash and later they regretted. So, do you see there is a slight chance that the same may happen this time around? While in all probability, it looks like whatever you are saying is going to pan out, in my opinion. So, I would like to have comments from Sainik, sir. Thank you.
Yeah, yeah. Okay, thank you. I'll briefly answer because what has happened in the past, I can spin a lot of stories, but suffice to say, it's like this. I followed the Wuhan case right from December of 2019. I used to spend about 2 to 3 hours, believe it or not. So I saw the BSC, the Bank Nifty peaking out. Bank Nifty peaked out on December 29th of 2019. We are talking of a crash, of a corona crash in March. I'm talking of the Bank Nifty already knew something was afoot. So I saw the weakness in Bank Nifty and I warned a lot of people and I took a lot of short positions on behalf of myself as well as my clients, and nothing happened. Nothing happened. January, the market, Nifty made a, January 20th, I think Nifty made a all-time high. Bank Nifty lagged. I remember at the Bombay, this is a very personal anecdote I would like to tell you. I was sitting at the Bombay airport lounge. I met a cricketer, Indian international cricketer, who's also punting in the stock market. He was my client many years ago, and he was traveling to Chennai with me. So I told him about this corona, and he started laughing at me. He said, "Don't try to scare me. This is all media, bullshit." These are the words which he used. I told him, "You sell off your portfolio." This was on January 29th of 2020, but he didn't believe me. And on Shivratri day of 2020, I think it was 24th February, I had gone to Bombay again. I met three big brokers. I told all of them that something big is happening. Get out of this market. At that point of time, Trump had just come in. And they said, no, what kind of corona, what nonsense. Corona will not get affected. Indians are a different breed. We will not, because everything in the media was like that. So everybody was very sure at that point of time that I'm talking of three large brokers. I'll not name them, but I had gone. I actually warned them, and I told them also how to short sell market. Also, I can show you, and at least you buy puts. They said no, it's not necessary because you see how can Trump come to India when there is no corona? I mean, if there is corona, he would not have come. And we had a huge gathering in Ahmedabad. So I tried my best to dissuade people, and of course what we didn't achieve in January, in by March first week, we made to be touchwood, we made some money for my clients. But when it actually fell, I'll tell you, I honestly panicked because I didn't know where this will end, because I had a very bad experience in 2008 October, and that's another story altogether. And so I just panicked. I did not take any position. Then I looked at the world leaders, like Warren Buffett did not take a position. The other big speculators did not take a position. They were all scared. So I also got scared with them. Though technically it looked like market had bottomed on March 23rd, I got scared. Till around May, June, I got scared. I didn't know what was happening, and so I missed that opportunity. But I had the selling opportunity, which I took it from December, and so that's life. I mean, you miss some, you don't miss some. So hopefully, see, every year or every day, I learn something new. I learned that not to get scared because the whole world was panicking, so I should not have panicked. When the whole world was euphoric, I was panicking. So now the whole world is euphoric and I'm panicking. So this time, I hopefully I've learned my lessons. Yeah, thank you.
Thank you, sir. Thank you.
So we have a very special speaker on the dais today. Epic Trails, even he's got a ton of experience. It would be lovely to hear some from him. He's been there in the market since 1980s. I just love to invite him on the speaker.
Yeah, do that. I would like to people to speak. Don't ask me questions. I'll be happy to answer. But I want your opinion. That's for me more important. And if it is a contrarian opinion, I would love it.
Yes, sir, even he's on our side.
Yeah, Abhishek, you are the boss. Go ahead.
Yes, I'm just sending him a request again. He was just on the speaker and then he went back. I don't know for what
Yeah,
reason.
Vipin
I
Bhai,
think he should come back.
my friend Vipin
Yeah,
Bhai, you are sitting there on top. Please say something. At least say good evening to me.
गुड इवनिंग सर
Good evening.
मैं थोड़ा सा अभी लिसनिंग मोड में ही हूँ मैं एक बार
Yeah. Okay, Vipin Bhai. Okay.
जी
Yeah.
Chalo,
No
koi
problem.
baat nahi. I will just give one small roundup of whatever we discussed today. So I have just shared on the top about 5 or 6 charts, which both me and sir, Epic Trails, please sir, go ahead. You, sir, I'll go after you, sir. Please.
Yeah, Abhishek, maybe you can ask Mitesh. Mitesh Saraf, would you like to say something, sir?
Hi, can you hear me?
Yeah, Mitesh sir. Please, sir. Please.
Sir, just wanted to have your opinion on the longer term effect of dollar index on the commodity market and how it will affect the current equity market in the longer run.
Sir, I have a 20 to 30% drop expected in the mainline indices in this year. See, I look at it, if I look at 2022, I think 2022 will be remembered like 2008 and 2000 and 1992 in terms of the market movements in the volatility and the drop. Now, drop in 2008 was 65%. I don't know whether it will go to 65%, though Vipin Bhai, whom I trust and who is a much more experienced guy in technical analysis, talks about that. See, I look at it 60 days. So I've told people, let's look at it by the end of March or first week of April. Then we will take it. Right now, I'm in a bomb shelter, sir. I am expecting some bombs to come, so I am sitting there. I don't want to look too far into the future and make some assumptions. Right now, even my my personal portfolio, I have sold about nearly 60% of my portfolio. I'm sitting in only 2 stocks. So I am not buying anything till April first week. So I am taking it step by step because what we are seeing today, we have not seen it at all. At all. Kargil war is nothing. I was there. I was trading the Kargil war. My friends were there who were fighting for us. 2003, nothing. Because 2003, it was Iraq versus the entire globe. Iraq was, a very weak power. You are fighting Russia. A completely different ball game. So there is no precedence. The only precedence we can think is World War II, which I don't know much. I have read about it. I have studied a lot about it, but I was not there. I'm not that old. So I would say at this point of time, be in cash as much as possible. As much as possible.
So where do you see the markets heading in the next 30 days? Like you said, you are sitting more on cash.
Sir, I don't bother about 30 days and all that. See, is an investor. See, as a trader, I'm bothered about tomorrow morning my positions.
Maybe like you said that you're sitting on cash and you are
Yes.
you're sitting. You might only enter the market post 1st of April.
Yes, I don't know, sir. See, I'm saying on 1st of April, I will look at it. I'm not saying I'll enter on 1st of April.
Okay, I got it.
So I'm enter next year only. I don't know. But 2022 will be regarded as one of those banner years. That I'm very sure. Banner.
That though everybody's sure of because this
No.
is not going to
Sorry,
be
sir.
like
Sorry.
in
No, sorry.
2020.
Okay, doesn't matter. Okay,
Sir, let me
let's
just
not
answer that
argue.
question.
Thank you, sir.
Yeah, thank you.
Okay, I'll just give you a quick. Sir, Epic Trails, please, sir, go ahead.
आवाज आ रही है? कैन यू एबल टू हियर मी?
Crisp and clear. Crisp and
ओके, नमस्कार सैनिक, अभिषेक एंड एटसेट्रा। देवों
नमस्कार
के
सर,
देव
नमस्कार।
महादेव का महाशिवरात्रि है आज, जो कला का भी देव है और डेथ का भी देव है। आई शैल कंटिन्यू इन हिंदी बिकॉज आई एम मोर कंफर्टेबल इन इट। पूरा
Sure, sir,
गुजराती
no
में पूरा गुजराती में पढ़ा हूँ, थोड़ी बहुत इंग्लिश आती है, जो बोलूंगा आप समझ नहीं पाओगे। बात आई थी कारगिल वॉर की। आई वॉज अ ट्रेडर इन दैट टाइम। 6% माइनस हिमाचल और ग्लोबल खुलते थे, केतन पारेख का टाइम था, और 5 या 4% अप जाके मार्केट बंद होता था। इसीलिए मैंने थोड़े दिन पहले लिखा था कि इसमें से 1% लोग ही इस टाइम पे ट्रेड करके ग्रीन एमटीएम दिखाएंगे। मैं तो एमटीएम दिखाने वाला हूँ नहीं। तो जो भी है, वैसे भी एमटीएम खत्म हो रहे हो, आई मीन डाउन जा रहा है। और स्पेस भी आज ये एक ही चल रही है, वरना तो गला फाड़ के वीकेंड पे तो बहुत चल रही थी। 500 पॉइंट, 5000 पॉइंट, जो भी है। 200 डीएमए के आसपास जब भी डांस होता है तब नीचे ही जाता है। ये सीधी बात है और बहुत सा सिंपल फॉर्मूला है। लेकिन आज किसी को बोलो कि नीचे जाता है तो या फिर वो ब्लॉक करता है या फिर वो अनफॉलो करता है, क्योंकि ये देश है वो भजनिक है, सब भजन करते हैं। और ये लोगों ने चिपका और जुम्बेश करके सभी सभी के डैश 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 में माल घुसा दिया है। ज्यादा तो नहीं बोलना, क्योंकि मैं जब बोलता हूँ तब सुनने वाले को तकलीफ होती है। लेकिन जो भी है वो ये है, जो भी जितना भी पैसा मिलता है जरा देखो, फ्रंटलाइन है या जो भी दौड़ने वाला स्टॉक है, अदानी है या अंबानी है। लेकिन ये जो मार्केट चल रही है, और LIC का तो ऑलरेडी आ गया, नीमू आंटी का, तो उसमें तो मुझे कुछ बोलना नहीं है। लेकिन दम ही नहीं है, कुछ कुछ भी ऊपर से नीचे कुछ दम नहीं है। चलता है तो ठीक है, लेकिन ध्यान रखना भैया। ओवर टू यू अभिषेक।
thank you, sir. That was very, very well precise, clear. बहुत अच्छे से ये रहा ये. Now, I would just like to get your attention on a few of these stats which I have shared. Number one is HDFC Bank, which is the heavyweight in both Nifty and Bank Nifty. So it lost 6.5% in the ADRs yesterday on extraordinary volume. This is what Sainik sir had shared yesterday. तो ये जो चीजें है ना कि तुम्हारे हैवी वेट्स में इतना खतरनाक सेलिंग हो रहा है. एंड देन लेट्स मूव टू द सेकंड चार्ट नाउ. दिस इज MOEX वर्सेस निफ्टी, व्हिच इज बेसिकली मॉस्को इंडेक्स, रशिया इंडेक्स वर्सेस निफ्टी. और आप देखोगे सिंस 2016 से लेके अभी तक मोर और लेस there's been the trend का जो फॉलोइंग सिस्टम है ना, वो एकदम मोर और लेस सेम ही है. See, wherever you're making a double top, it's making a double top. I'm not saying it's exactly the same percentage में variance है. In fact, our markets have outperformed Russia by a big margin since 2016. तो यहाँ पे risk off का जो mood है ना अपने market में बहुत ही ज़्यादा हो सकता है even compared to Russia. So see, if you just look at the chart, so basically now Russia is much below the COVID low as well. तो COVID low अपना था 7,500. तो ये अब इतना अपना जो विपिन भाई है यहाँ पे, तो he had predicted the target for Nifty as around 6,000. So that is much below the COVID low, right? So that possibility is always there, and it's just not because of geopolitical uncertainty. जो structure जो बन रहा है ना अभी distribution का, जो तुमको दिख रहा होगा at about 6 months, October 2021 से अब ये March हो गया, तो 6 महीने का distribution is very, very powerful, and you should not ignore these kind of structures. And double top भी बन गया. So you should not completely neglect the fact that it can go back and test COVID lows. वो possibility रहती है, and you should also think कि ये possibility हो सकता है market में. ठीक है? So this is what I had to say about this. The next one is between Dow Jones and Nifty, and this is the one. Okay, this is the one which I had to get your attention on for everyone. ये जो अपना लास्ट वाला है ना, bearish sentiment check करके एक ट्वीट है मेरा खुद का. So as of now, it's as bad as COVID-19. You can just open the chart and see कि तुम्हारा average bears का कितना ratio short है, how much percentage short. So if you look at what is there in the data in that, so whenever investors got this bearish 1 year forward returns were positive 69% of the time, with a median gain of 21.6%, albeit for the 31% of cases where returns were negative. Average loss was minus 24% and losses minus 39%. So this could be, so अभी क्या है सिनेरियो ऐसा है कि हम लोग इतना ऊपर में जाके बैठ चुके हैं कि यहाँ से और ऊपर जाना कुछ ज़्यादा ही टफ लग रहा है एट दिस पॉइंट ऑफ टाइम. और ये जो अपना जो लाइन है ना, वो जो येलो कलर लाइन जो नीचे में दिख रहा है एवरेज बेयर्स वाला, so whenever it's gone shorten up much higher than this, that's the only time in 2008 kind of a thing had happened. और वहाँ पे भी तुम्हारा सेक्युलर अपट्रेंड चल रहा था सिंस फॉर द पास्ट 6-7 years. वो सिनेरियो अभी भी बेटर है, एंड इनफैक्ट दिस ट्रेंड इज मच मोर फास्टर देन दैट. तो अभी कहाँ है, तो आई एम जस्ट ट्राइंग टू connect the dots. So sentiment basically as bad as the COVID crash, but then again you have to ask, is this 2020 or is it 2008? That is something which time will tell. So now over to now to the next question. Naveen sir, you can go ahead.
Sir, good evening, everyone. Sanik sir, Abhishek sir, Vipin sir, everyone.
Yeah, good evening, sir.
And most of all of you have explained very well. जो जो स्टेटस अभी बना है वो बिकॉज ऑफ वार बना है, और ये पहले से भी जैसे सेलिंग आ रहा था ना, वहां से दिख रहा था कि कोई ग्रेव प्रॉब्लम चल रही है, और इतना क्लियर नहीं था। मगर जो मार्च का तो फेब से क्लियर था कि बहुत कुछ बड़ा होने वाला है। अभी इंटेंसिटी ऑफ वार आपको देखना है कि कितना बड़ा वार जाने वाला है ये। अगर ये वार बड़ा होता जाता है तो बहुत बड़ी प्रॉब्लम आ जाएगी। ये सब पूरे ग्लोबल में सबको अफेक्ट करेगा, यूरोप को करेगा और अमेरिका को करेगा। उसकी इंटेंसिटी देखो कि रशियंस कोई भी एक इंच को भी वो नहीं बख्श रहे हैं। और इशू क्या है, सिर्फ ऑक्यूपेशन है या वो इरिटेट हो चुके हैं अमेरिकन से या यूरोपियन से? वो मैटर पे कोई भी लाइट डालेगा तो क्लियर होगा कि आगे कब तक ये सेटलमेंट आएगा। ये अप्रैल में होगा, मुझे नहीं लगता कि 6 महीने में जाके ये सब सेटलमेंट हो जाएगा, इतना इजी नहीं है। और अनदर थिंग इज दैट के एब्सटेन रहा है इंडिया, एब्सटेन रहा है ना, तो वो अमेरिकन के साथ है और ना रशियंस के साथ है। उसके साथ में जो अमेरिकन की तरफ से एक स्टेटमेंट आई है कि वी आर रिकॉग्नाइजिंग द डिस्टिंक्ट रिलेशंस विद मॉस्को, दिल्ली डिस्टिंक्ट रिलेशन विद मॉस्को। वो वहां पर इंडियंस को डाउट कर रहे हैं, और रशिया को वो कुछ नहीं बोल, चाइना को कुछ नहीं बोल रहे हैं। मगर उसका उसका उसको अगर आप एक बार एफआईज को देखें तो पिछले 1 साल से वो कंटिन्यू सेलिंग कर रहे हैं। उनके पास इंफॉर्मेशन थी कि इंडिया क्या करेगा, सबको पता होता है। ये हमको ही आम आदमी को पता नहीं होता कि वार कब होगा, कैसे होगा, क्या होगा। इंटेलिजेंस सबके पास है, केजीबी है, रॉ है या अमेरिकन है, वो जो भी है सबको पता रहता है कि कौन क्या मूवमेंट कर रहा है। क्योंकि तैयारियों जो प्रिपरेशन ऑफ वार होती है वो बहुत बड़े लेवल पे होती है, एक दिन में नहीं होती है कोई भी। तो नेक्स्ट 1 ईयर और 2 ईयर्स आई कैन, मतलब 2 ईयर तो बहुत ज्यादा हो जाता है बोलना, क्योंकि हम 3 दिन बाद की भी बात नहीं बोल पाते हैं वार के टाइम पे। मगर क्या होने वाला है और किसकी क्या स्टेटमेंट आती है उसको उसको बड़ा क्लोजली आप वॉच करें, सुने कि ब्रिटेन क्या कह रहा है। मुझे तो ये लग रहा है कि ब्रिटेन यूरोप को ठुकवाएगा, क्योंकि यूरोप में जर्मनी को भी एनर्जी चाहिए और फ्रांस को भी एनर्जी। आई हैव लिव्ड देयर 5 इयर्स। तो और रशियंस के साथ भी, सबके साथ भी मैं 5 साल एक यूनिवर्सिटी में था, मैं कोच था वहां पे। तो आई कुड अंडरस्टैंड देयर और वो ये तब से 20 साल पहले से तैयार था। जब पुतिन प्रेसिडेंट बना और सार्कोजी को किस तरह से उसने धमकाया, साफ क्लियर 2007 के अंदर क्लियर कट कह दिया था, भाई तुम्हारा देश तो इतना है, मेरा इतना बड़ा है। और मीटिंग में बाहर आने के बाद सार्कोजी ये नहीं बोल पाया था, तो 2007 में ही क्लियर हो गया था कि रशिया कुछ करने वाला है। मगर 13 साल उसने अपनी प्रिपरेशंस की हैं, और नेक्स्ट जो टाइम आएगा वो समथिंग अलग होने वाला है, बहुत बड़े लेवल पे। और मैं ये 2-3 महीने से मैं कहने की कोशिश कर रहा था, ट्वीट भी कर रहा था और बोल भी रहा था, मगर लोग जब तक हो नहीं जाता है ना तब तक आप पे विश्वास नहीं करते हैं। सो सैनिक सर ने कहा, अभिषेक सर ने कहा और विपिन सर तो नॉर्मली कहते ही रहते हैं अपने ट्वीट्स में कि अपने भाई कैश को संभालो, जो गिर रहा है ना, फाल हो रहा है। और एक बार बताऊं मैं आपको, पिछले लास्ट मार्च से हम कह रहे हैं ये, मगर क्या है कि हम इतने बड़े नहीं हैं कि जितने बड़े ट्विटर हैंडल और भी हैं या ट्रेडर हैं, इन्वेस्टर हैं, उतने नहीं है, तो कोई हमारी बात सुनता नहीं है। पर आप देख सकते हैं अभी, और सिट टाइट विद कैश, आपको मौका मिलेगा, भयंकर मौका मिलेगा। और अगले 2-3 साल क्रिश्चियन होने वाले हैं, और आप देखिए, ठीक है। वेल, टेक योर डिसीजन योरसेल्फ। थैंक यू सर, थैंक यू सैनिक सर, अभिषेक सर।
Yeah, thank you very much, sir.
Thank you, sir.
Abhishek. Yeah.
Next, SK.
Hi. Sorry, I
Hi, hi.
actually joined this just 10 minutes ago. So I just want to share some of my views. It probably it could be a repetition of what other people say. But essentially, there was one point with a gentleman asked, as in, Sainik was, why do you hold cash? Does it make sense? Do you make a decision post April? I think it's the wisest thing. Simply because my view is that the current status of the Indian economy is not as strong as people make it out to be. In fact, it is very weak at this moment of time, and I'll give you numbers. Don't ignore the GST numbers. The GST number is completely, not dependable, and I'll tell you why. What the government is doing is that it's earning a lot of GST from IGST, which is intermediate GST. Okay, while when you do a transaction, you do SGST and CGST. When you pay your bill at a restaurant, when you buy a good from Amazon, you will see SGST and CGST. You don't pay IGST. So if you look at SGST and CGST, the 2-year CAGR growth over the last 7 to 8 months is only 7% CAGR. That is 2-year compounded growth, which actually is very weak because we all know that WPI, which is a good barometer of inflation, is at least 13 to 14%, and it's not only on goods, even on services. Let's give you an example of services. The average revenue per hospital bed in the last 1 year has gone up by 25%. Now, this is reported by all the hospital companies. You look at the average revenue per hotel bed, that's gone up by 25 to 30%. Right? Services across the board, even restaurants have increased. So I'm just saying that don't look at the CGST number and IGST number. Don't look at the IGST number. Focus on the CGST and SGST. Also, the government had changed the law sometime in March 2021, where they said that if your vendor does not file in time, I will not give you credit for your payment of GST. So there's a lot of GST that is locked up, and of course there's a lot of imported related GST. So that's one point I want to make. And then if you look at some of the other data points, like your two-wheeler sales, which is down 25-30%, your car sales, which is still flat to negative territory. If you look at the commentary by all the consumer companies, be it Hindustan Unilever, Dabur, Godrej, Marico, all of them are talking about 0 to negative to marginally maybe 1% positive volume growth. That, in my view, is not a sign of a healthy economy. Power demand in the month of Jan, I think, was only up 1% on a base of 6%. So you're talking about 2-year CAGR of 3%, which again is very, very weak. So that I wanted to paint this picture because the impression amongst most investors is that Indian economy is booming. It is not booming. Now, now let's go to another point about the markets right now, and I just want to draw upon what Sainik said. I agree that the current scenario world over, especially in the Russia situation, is that it is unprecedented because you are putting Mr. Putin against the wall. Every single Western nation is doing that, and when you put somebody against the wall, you could have a disastrous outcome. So that is one thing that we have never really faced, and you can't calculate. The last other point I wanted to make is people are getting a lot of positivity from this rally in US bonds, which is and the yields coming off. That actually, and typically people would say that is great for technology. It's great for all these long duration stocks. I beg to differ. Right now, what's going on is a very funny situation where your value at risk, which is VAR and not war, but value at risk, those ratios are actually going up world over. So if on one side you have the US 10-year yield falling down, on the other side you have corporate bond yields going up. So nobody's talking about that. The second other thing that I want to point out was that you have the US dollar strengthening. That is a indication of risk aversion and not positive, bullishness. And the last point I want to make, when a lot of people ask this question, why are foreigners selling India? Let me put it very simply. There is no value in India simply because you have far better value in the US. The return on equity of the US S&P is as good or better than India, but its valuation is cheaper than India. You have the most innovative companies in the world listed in the US. You have less innovative companies in the world listed in India. I just want to leave that thought. And so if I were if I wanted to go to a restaurant, I would go to the restaurant that gives me, the best quality service at the same time, the best price. Or if I go buy a shoe, I want to go at, if the same shoe, I want to buy it at the best shop, which gives me the best price. So likewise, foreigners are saying that, listen, there is no reason to be bullish on India because the underlying data doesn't suggest positivity. There is also this problem of crude oil, which is very bad for India, and and US is far more cheaper. Plus, it is a dollar asset. While right now, I do not want to be in non-dollar assets. I just want to give that point. Thanks.
That was very, very well put points. All of them were really appreciated. Just one comment on the Nasdaq versus Nifty IT index. If you just look at it, the way it's gone up from March 2020 till now, till the peak, not just now, just till the peak. I think Nifty IT index has gone up by 225% from the bottom. Maybe it's a ballpark estimate. Maybe it could be 15% higher or lower. And your Nasdaq has gone up by 145%. So that kind of a difference, whereas US is a completely developed market and we're still in EM. That is very appalling. In fact, that would be the word. Anyway, let's go back to the next speaker. M. Bharat, please.
Yeah, so thanks for the opportunity. So, my point is start with this euphoria that we have recently seen after March 2020. So, the kind of drop we seen in 2007 8, and after that, the time the market has taken to come out of that is nearly 2 years. But this euphoria, this generated by the social media expert, and then the kind of market bounce from that has basically led to the lot of many retail investors in this. So what I am saying basically is that because of this euphoria after 15,000, that is what I guess after 15,000, the market is now become very, very overvalued. But we never know, like after October when it make the peak of 18,000, the selling started very fast. But somehow the reason was pointed that maybe the Fed rate, maybe the overvaluation. But this Ukraine crisis was never under the discussion. I was gone through the Cynics are also handled when he written basically a great thread on the this overvaluation. So 2 3 points that I would like to ask to Sainik sir is one way we were pointing out the overvaluation of the market and Fed rate hike and every other reason or the parameter for the fall in the 2022. But this Ukraine crisis basically added on or over and above all the reason behind that. So any value that or any further drop from the earlier reason that we see or foresee for the market in coming months, or we are still at the same reasons that same value that we earlier predicted in December or October kind of thing.
Sorry, what was the question? No, sorry. I was a question on this. Sorry, what are the questions, sir? Sorry, extremely sorry. I just, for a moment, I moved the other way. What are the questions, sir?
The question was like, I just gone through earlier also I read your thread, your post, I have been reading it. So you said you have been saying that apart from our other, great Twitter handle who were very, very, very bullish, you have been saying this bearishness in the market since October, November, or maybe December. You have posted a detailed thread on that. So At that time, I think I also and a lot of other also didn't aware of this Ukraine crisis is coming on the way. We have been selling FIA selling. We have been doing this overvaluation. We have been talking about the Fed rate hike, everything. But
Correct.
this Ukraine crisis is a kind of surprise to us that it may create such a extent problem.
Correct.
So I just would like to know your view. Will this crisis will further deepen or further drop or further have a heavy impact on the market, or we will have the same kind of impact which we were earlier predicting December or November kind of month?
Yeah, thank you. Thank you. I'm extremely sorry that I missed it. See, there was a difference of opinion between me and Vipin in terms of the magnitude. Direction, we both were on the same page. So I said we'll have a 20 to 30% drop because it's a typical bear market you will have after about 3-4 years of bull market. If you go back and see 2015-16, 2010-11, you have had a bear market which lasted for 12 to 14 months and where the index drops 25 to 30%. So this is the formula I used, that we are ready for a typical bear market. So we will have, I mean, in all probability, 2022 will be that year. So this I was mentioning right from somewhere around August, September. At that time, there was still, I mean, nobody was talking about inflation. They were talking of transitory and all that. So I calculated based on that. Now, what has happened is this Ukraine crisis, obviously, I didn't know. And what we are seeing, the low of the index and many stocks we have seen actually on December 20th. Now we are much higher than what we are in December 20th. Now this Ukraine crisis has surprised all of us. I am also in that group of people who have been surprised. The moment you are surprised, you have to go and analyze what are the pros and cons, where will it go. Now, after I have been spending, believe it or not, sir, 4 hours every single day, 4 hours on Clubhouse sessions which talk only of Ukraine. There are Clubhouse sessions which are running for the last 6 days continuously. So I spend 4 hours every single day. So I try to understand for people on the ground what their feeling is. And then, of course, I read. So approximately 6 hours I spend on Ukraine every single day for the last, say, 15 days I've been doing. Even today I've spent. Early morning I got up and did that. Now, when I look at it, honestly, I feel everybody's underestimating the economic impact of the crisis. So therefore, I used to say that, we'll do SIP. Let's do SIP. This was just last week. And I had some ITC and IS Bank. Now today I'm ruthlessly cut everything, sir. Bare minimum I have. Because I believe this is going to be much bigger than what we have, what we are thinking. So I am coming closer to Vipin's target. Of course, I'm not very close to Vipin's target, but now maybe a 10,800, which we saw on September 24th of 2020. September 24th of 2020, we saw 10,800. A 10,800 target is not impossible. Now, I believe strongly that this Ukraine crisis will not end till Putin ends it. Putin is the only person who can end it. So now these guys are talking of assassination of Putin, removing him, coup in Russia. Those are all far-fetched ideas as of now. Now only Putin can end this. It will not be Biden. It will not be Ukraine. Nobody. So I don't think Putin is going to end it because the whole globe is trying to humiliate him. He is a powerful guy. Russia is a powerful country. It is a supplier to the world in terms of wheat, corn, and so many other things which I have just read out. It is like, sir, spitting in the wind. If you spit in the wind, it will come and hit you. These guys don't know. These European fellows, unfortunately, I've used such harsh language. They are basically bullies. And bullies are basically cowards. So they are trying to bully Putin, who is the biggest bully of them all, and he's got substance. If you observe, he has not yet opened his cards. It is not that he doesn't have cards. He's got lots of cards, he's not opened it. And if you read history of Russia in the Second World War, you will know Russians will eat stone and move forward, sir. That is the kind of people. They don't need the cushy life of what these Europeans have. Democracy and all is fine, but when you want to fight on the trenches, you need people who will eat stones and survive. That is the kind of mentality of the Russians. The ruthless fellows there. when they open up their cards, which I'm sure they'll open up in the next few days, I think we will see the true Tandav happening, in my opinion. Therefore, I don't want to make any predictions. 10,800 is just a number I told you because that is another support level. That's all. I don't want to think, sir. Right now, my focus is don't put a single rupee into the market from tomorrow onwards. I will not put. I have managed my daughter's funds. I am not going to put a single rupee, and I've already cut short my portfolio of ITC and S-Bank ruthlessly last week. It is because anyway my purchase price is much lower, but I am not going to do that because I do not know the depth of this fall. I'll just give an example. In 2007, I was very bearish. I wrote an article in my friend's newspaper and I need to tell this story because I want to contrast this. You raised a question which I need to answer that. You will probably get a better answer. So I wrote saying 19,500 Sensex overvalue. By the time the article went to Bangalore, it was a Sunday weekly paper, published only on Sundays, it had gone to 20,000. So he told me that how can I publish this at 20,000? So I said, okay, you write 20,000 as the bubble territory. By the time he published it, the market had gone to 21,000. And it was, everybody laughed at him apparently in Bangalore. And it went to 21,200. And even then I had said that the market is overheated. You will get a bear market, 20 to 30%. So, and I told them it will be a 12-month bear market because the typical bear market, it will be 12 to 14 months. It will drop 20 to 30%. So I was right in that time of the bear market, 12 to 14 months. It bottomed out in March of 2009, but actual bottom was on October 27th, I think, if I remember right, in 2008. So I was right on the distance, but on the magnitude was completely wrong. It fell down 65%. Now, second part I'll tell you. In Lehman Brothers happened on September 15th of 2008. So you see, Lehman Brothers, big thing. Everybody talks of Lehman Brothers. When Lehman Brothers collapsed, the market fell. But subsequent to that, Indian market, US market went up 10% after the tragedy of Lehman Brothers. After the tragedy of Lehman Brothers, it went up 10%. You can go and check it out. And today, people are looking at the world and thinking nothing. I mean, see, Indian market is going up, so this is the technical parameter. It's going here, there. It went to 4,100 or something. The Nifty. I went left, right, center, short in the market, sir. I pushed everything. And by the time we reached on October 13th or something, it had fallen to 3,100, 3,200. So I made 1,000 points within a span of 2 weeks. Then what I did, I thought I'm very smart. I understood the market. So I went 4 times long, which means I converted all my short, covered it and went 4 times long. In the next 8 trading sessions, the market fell down to 2250. Whatever I had made between September 15th till October 13th, I lost everything plus more. So I learned my lesson. Don't try to outsmart the market. The market will outsmart you. And when in 2008, I was already 17 years into the market. It was not that I was a bacha or something. And I had studied deeply Lehman Brothers. Then I was following up what was happening. Every single day I was to follow up the economic part of what the government was doing. So I don't want to predict, sir. I only know this is not the time to get in. If a tsunami is coming, I am from Madras. So tsunami came. We didn't know the extent of a problem in tsunami. I only know when a tsunami comes, I should not be near the tsunami. I don't want to be, sir. This Tandav is going to happen. I don't want to be near that. I want to just sit. No problem. It's a long answer, but I thought I should tell you that. Yes,
Thank you, sir. I hope you got your answer, Bharat.
Yeah, Abhishek, if you can allow one short, follow-up question.
Okay, just a small question.
Before that, just housekeeping. May I request people when they're not speaking to mute themselves. SK, I think you want to speak. Certainly.
Yeah, SK wants to speak.
Yeah. But kindly mute it. Nifty 50 also kindly mute it. Kindly mute, sir, please, so that there'll be no ambient noises coming in. So when you want to speak, you raise your hands. Obviously, we will do this program. I normally do for 2 hours. We'll do it for more time, no problem, sir. So long as
yes, sir.
we are right.
Yes, sir.
Yeah.
So I just wanted to add a couple of things, Sainik. One is that See, what happened last time in March, I'm not saying that to the extent you could be correct about, the correction, but I just want to, highlight the difference between what happened in March and what potentially can happen this time. In March, if you look at something called, there's a category of funds called risk parity funds. There's a category of funds called volatility targeted funds. And then there's, of course, the pension funds and then the hedge funds. Now, if you go back to the history of March 2020, at that point of time, the equity exposure, just for the background, something called a volatility target fund and a risk parity fund, they basically try and use a mix of equity, debt, commodities, and target a certain limited amount of volatility. If the volatility rises, they change the proportion of equity, debt, and commodities, so that the volatility of the portfolio reduces within a certain limit. Usually, that's 10%. And just for perspective, like Indian markets, the VIX, which is an indication of our volatility, is about 21%. So going back, a lot of these funds, because of the fall in volatility over the last several years, because of what the US Fed had been doing, which is printing money, and every time the market fell, the Fed printed more money, and so as a result, your volatility reduced, and hence people's exposure to equity across these asset classes like the targeted volatility funds or the risk parity funds or the pension funds, all these guys increase the exposure to equity to about 65-70%, which was historically a much higher level than typically they would maintain. They would typically maintain about 55 to 50%. And at that point of time, there was a very strange thing that when crude oil crashed because of what Saudi Arabia did, that resulted in a lot of volatile VAR value at risk, spiking up significantly. And because crude oil crashed, a lot of the sovereign funds like your Norwegian sovereign fund, your Saudi sovereign fund, your Kuwaiti sovereign fund, they pulled out money. So not only did these funds were forced to reduce their exposure on equity, their assets actually collapsed because there were redemption calls. Now, the good thing is that this time round, and there is something in Bloomberg called the volatility targeted fund equity export index. It tells you what proportion of equity is held by these funds right now. That is closer to about 45-50%. It's not like 65% that was in existence in March 2020. So to that extent, I think the impact could be a lot less severe. The parallel I want to draw with respect to the Lehman crisis, and since you pointed out that was very interesting, is that what we don't know is with the collapse in Russia, I'm sure a lot of European banks have funded a lot of Russian companies, right? They're bankers, right? European banks are big banks. They would have definitely funded. What we don't know is what kind of loss these European banks are sitting on because of the exposure to Russia. However small it might be, European banks are very highly leveraged, institutions. They could be leveraged 25 to 30 times. So even if a 3% loss on their asset can wipe out their equity. So that is something we don't know at this moment of time. And the other last thing I wanted to highlight was, and you had pointed out very well, is that Putin hasn't used any of his cards. You're right. His cards are commodity, your wheat, your various food commodities. And actually, if you look at, there's this very interesting report put out by Rabobank, almost like at the beginning of 2021. The report was, Joseph had a bad dream, okay, where he and this was basically, he takes it back to what happened during the when the Pharaoh of Egypt, there was a huge famine that hit Egypt, and it was a dream that Joseph had about the famine, and he warned the Pharaoh. The Pharaoh did not. So likewise, this guy wrote a report about how the various, what are the various things that can happen that can severely hit food commodity. And the reason why I'm bringing this up is because this level of inventory of various food commodities globally is at amongst the lowest levels in years. Okay, and guess who's been the biggest buyer last year of food commodities, and even this calendar year 2022, who was the biggest buyer? It was China.
US.
It was China. China has bought all the wheat possible. They bought it from the French, they bought it from the Ukrainians, they bought it from the Russians, they bought it from everybody. They were the largest buyers. And if you look at the wheat prices, so actually today, there is no wheat anywhere in the world, okay, in terms of inventory. If tomorrow Russia decides we're not going to allow wheat to be supplied, boss, we can have a massive food crisis. I think that's something that I don't know how you can put into markets.
Absolutely right, SK. It's wonderful analysis here. Thank you.
Yeah, thank you, SK. Super. Thank you. Can we all mute?
Amazing. Okay, next up, let's head towards Pankaj.
Hello.
Yeah.
Hello, am I audible?
Yes, you are. Go ahead.
Yeah. I just like to present one simple data point about crude oil actually. So generally, people tend to say that higher crude oil prices are good for stock markets, but too much higher crude oils are not exactly. So currently, crude oil is around 104, 105. Historically, only 2 times it has been more than 90 to 95. One was it was around late 2007 and early 2008, and second time it was between 2011 and 13. And if you check how our markets have performed in both the instances, first one, of course, it coincided with the uh, housing crisis, so obviously markets were falling. But even between 2011 and 13, our market, I mean, I'm talking about Nifty specifically. So Nifty didn't go anywhere. So till Lok Sabha elections in May 2014, till that time, Nifty did nothing for 3 years. So even currently, crude oil is clearly in uptrend. It might drop a few points, but again, the territory is upwards. So in that case, as long as crude oil does not go below probably $85-90, I won't be too bullish on the markets. I'm talking only about investments, not about trading. Like I cannot predict what will happen tomorrow or 1 week later. I'm just talking about my portfolio. So till the time crude oil does not cool off, I would like to keep some cash in hand, and I won't be aggressively buying in my portfolio. That's it.
Yeah, thank you, Pankaj. Yeah, I noticed that you're from JBIMS. I am also from JBIMS, 85, 87 batch. Which batch are you?
2009. 2009.
Yeah. Okay, thank you.
Okay, next up, MEK. You can go ahead.
Yeah, this is Kapil here. My simple question to Senex sir was that, a lot of people who have a bullish case scenario for Nifty, they talk of PE, and they say that at 16,200 or 16,500, it's at a fair value. Now, I just want your opinion, Senex sir, on this comment.
Sir, this PE business is a very tricky one. And who is to decide what is fair value? If you go back and see in 2008, when the market was panicking, PE was about 12. Okay. So I don't know how to decide fair value. When there is panic, when something changes dramatically. See, in 2008, people thought there will be no financial system at all. So let us say this thing, unfortunately, let's say, gets dragged on. So you wouldn't know. When you don't know what will be the path of the corporate profits or the economy, so how will you judge? So this forward PE, first of all, is a very big scam, which is perpetrated by the media and supported by the analysts. So I only go by what is your performance, past performance. So I don't want to go to this 16p or 12p or 14p. We have to see it. What if the earnings crash? It's a possibility. If things go bad, as SK says, if wheat is not available, where is the question of peas, sir? First of all, I want to go and eat my chapati, or roti or something. So I don't want to. I do not believe in this business of fair value. There is nothing like fair value. We have seen. I have seen in the past, fair value has been. I mean, let's say it's gone much below the fair value, which I tell you was 12 in 2008. And just you cannot, something goes up 30p, you cannot go and short it in a bull market, then your pants will be handed over to you. So I don't even want to consider the P's. It has not worked out well in history of the stock market, and I am a follower, a student of the stock market. I don't think one thing. At least I won't spend that.
Sir, which I completely understand, because you know what happens is, in a crisis scenario, all the emotions move 10, 100 times fold, so no rational thinking works. I get that. My only point is, suppose there was no Russian war. Suppose everything was normal, right? There's nothing normal always, but anyways, there was no Russian war. I just want to know, what, according to you, is the fair value? Is there a matrix we can assess a fair value? Rough idea.
Yeah. If 15p is a damn good thing to look at, below 20, I think there have been some charts made out by, I think, ICSI or someplace. Maybe Prashant is one nerd who will have data on that. I'm trying to invite him, that Prashant is not coming up to speak. If he's listening, at least please speak. But I would like to look at 15. But again, what is 15? 15 vis-a-vis what that industry PE is. That is also there. And what 15p vis-a-vis what the stock itself has had PE in the past. So there are parameters which I look at. I don't think a particular number is there, but people have found out that if you have a 15 PE for the index, by and large, you are in safe territory. It has gone to 12, but it will bounce back to 15 plus over a period of time. This is what historically it has said. So 15p could be a good
Sir,
parameter.
other than PE, is there a method or a barometer to assess the fair value of of markets as an index? So stocks will vary, of course, but at an index level, according to you.
I think
Yeah,
SK can answer that.
to be very honest, before that, to be very honest, I look at stocks when I buy. I'm buying more of stocks and not index, really speaking. So I look at various factors before looking at PE. And I look at environment, I look at what is happening around the world. And they're more of qualitative, and then I put some number to it, and then I think. Now, this number I told 25 to 20 to 30% is a standard bear market band, which we have seen in the past. So I'm looking at 20 to 30%. So there is no sanctity on that. It can go to 34%. It can go to 50%, which it has gone in 92. It can go to 65%, which has gone in 2008. So I would say 20% at 30%. Sorry, at 30%, I would like to nibble into the market, considering that there are no what shall I say, universe-ending situation. A war is a universe-ending situation, sir. So I would like to look at it. I would like to look at it differently. If it is just a normal, plain vanilla bear market, at 25%, I will, my antenna will go up.
Yes, sir.
So
That's
yeah.
let's just listen to SK. I wanted to add something on this.
So typically in a very regular balance, what you should try and use is your GSEC, right? Your government security, say it's at 6.5%. Then typically in a no growth company, you would use the reverse of that, which is about 16 times. Now, of course, if the company is of a higher growth and generates a return on equity greater than your cost of capital, which is typically about 12 or 13%, then you could ascribe a slightly higher fair value. But I just want to draw your point to this entire, see, we need to understand one thing. India is a highly rigged market. And why it is rigged is because the free float is very small. It's not like the US where the free float of companies is very large, and so you have, or even China where the free float is extremely large. But let me, make it very simple for you. In the year 2008, India's return on equity used to be about 20 to 23%, while the rest of emerging markets used to be about 12 or 13%. Korea used to be 9%, for instance, right? And so there was an argument saying that India deserves a higher price to earnings multiple, 30 to 40% premium to the rest of emerging markets. Today, India's return on equity is not different from any other emerging market. Even Korea is as good as India. China is as good as India. There is no difference. And in fact, US is as good or slightly better than India and more sustainable, right? So if you think about it, India doesn't deserve to have a higher premium multiple to the rest of emerging markets, nor to the US. And so then you try and say, okay, what is the forward P multiple of the US? And I try and give it a slight discount to it. Because that's only fair, right? If you're not generating a better return on equity, why should you ascribe it a higher value? And then there is this entire argument saying India's long-term growth opportunity is great. Sorry, I want to burst that bubble over there. But India doesn't have a very big consuming class. India's total consuming class, when I say consuming class, middle class. And when I define middle class, it is a person who can earn at least an annual income of 5.5 to 6 lakhs a year. I think most of you all will agree that that would be a decent definition of middle class, 5.5 to 6 lakhs per year. Then we have only 25 million people earning that amount in the country. That's all. I have done a lot of analysis to arrive at this, and it is quite a correct data. I have verified this with several very well-known people. I don't want to mention whom. But we only have 25 million people, which is very small actually in a population of 1.4. So when people say, which explains to you why our car sales haven't been growing for the last 4 or 5 years. It'll explain to you why, Uber, Zomato is struggling to show growth. It'll explain to you why Nykaa has seen only a 1% sequential growth in the number of customers who have signed up, which is very small considering the fact that this company has only started recently. So my point is that we need to create a much bigger set of people who can consume in India. Until then, India return on equity will not be that great, and which is one of the reasons why, if you look at corporate credit growth, it is growing at 6%, which is very low for an economy like India. So that's why I wanted to say that use US as a benchmark, give a slight discount, and that would be a better way to always compare return on equity on the markets.
That's a very well rounded.
Thank you.
Yeah.
Neelkanta, you want to say?
Neelkanta, sir. Yeah.
Hi, Sainik. How are you?
I'm fine, Neelkanta.
Yeah, thank you. This is the first time we are interacting over here. So what I found you... Yeah, am I audible?
Yeah, you are.
Yeah, it is echoing actually. Okay, so what I found you talk sense because see what I'm not in any certified or anything. So I'm in the market since 2004. See, this moment market is completely news driven, and it's difficult to predict the market accurately because any news may impact in the market anytime. But what I want to say few points over here, which majorly market has discounted a certain level and more to discount. Those are maybe the Russia has 11% market share in the oil and gas market. You are aware about that. So once the war has been started, so this already has started discounting on that in the market, but still crude and gas price has to increase and demand shifting has to happen time to time. So apart from that, there are sanctions are also there. So which may impact in different ways, like the crude oil price. It is already, I told you, the 11% stake in the global market, which will definitely impact as and when the demand shifting will happen. Apart from that, there is the biggest market in the Russia and Ukraine. This market is more than 20% stake in the steel sector.
Apart from that, there's the sunflower seeds. What I was just doing this analysis, I was seeing that the sunflower seeds, that is more than 30% comes from these countries, right? So there is a
No,
huge
90%. 90%. I already
yeah,
made this mention. You missed it, I suppose. 90%.
Sorry. I know 70%. Yeah. So now huge increase in crude oil is not good for the market. Anytime we have not seen that because of input cost and the transportation cost will increase, and that will impact majority and most all majority of industries, you can say. So apart from these, there are multiple more points which is a negatively may impact the market, and definitely it will impact. Like Putin has threatened, he is threatening the nuclear detonation, that you are aware about that, right? So he has asked his team to be ready for the same. So anytime anything may happen, though I am not going into that whether it will happen or not. Apart from that, there's a brutal selling already has happened in the secondary market, because if you talk about in 2008, the total 12.2 billion were sold, and now in this last February March, it was 23.5 billion sale has happened in 2020, 21 to 22. I mean till October. Since October. So this is another reason. And another thing is, while no one knows the bottom and the top, right? So predicting the bottom or the top, it is very difficult. But the positive side, what I see, the very temporary, that is the LIC IPO. But Russia cannot continue the war for a longer time, because everyday spending is $20 Arab, right? So all together, I am seeing the market. I am forcing this market to go down, and that is for 15,300 level. Now, this is the fundamental part already I have discussed. Apart from that, that's a technically, if I talk about that, there's a 15,300 level which I am saying that, but this will impact market at least for a longer run for 6-7 months, which I am predicting. So this is over to you. Thank you.
Yeah, thank you, Neelkanta. Points well made. Some of this we had actually covered. Let's see where we go.
Okay, next up, Anup.
Vikas Jha? Vikash?
Yeah, hello.
Yeah, is it Anup?
Okay, Anup, go ahead.
No, one minute. No. Before Anup, Vikash?
Hi, Sanik. Good evening.
Yeah.
So,
Good evening, Vikash.
I'm not here to discuss anything. I just have one question that I would like to ask you. So, you talk about the short sale thing. So, we all know that SEBI bring this short selling ban in May 2020. I think it's March 2020. After that crash happened, and they said that we are monitoring this for next 15 days and will lift this ban. Again, after June, they said it, okay, let's review this for one more month, and they keep reviewing it for till October 2020. And after 2020, they stopped sending any updates and say this has been in place till further notice. So coming back to this point, so is it because of ban in the short selling we are not able to see that kind of fall that people are anticipating on the Indian stock market?
See, this ban business, it is a prerogative of the regulator, and regulators are all irresponsible regulators. You take any regulator, SEBI is just one of the regulators. So they can, see, nobody likes a bear market. Nobody, okay? Including me. I'm sitting here with stocks in my portfolio. It's not that, 100% cash. So it's always nice to see the market going up. So everybody is optimistic. So people will try their best to prevent the market coming down more than what it should come according to them. So they believe that some speculators, anti-nationals are coming in short selling. So therefore we will put a floor to it, and we'll put a ban on it. So therefore, nobody will short sell, and therefore the market will not fall further. They don't understand how the markets function. So there's no point in arguing on that. So there are no anti-nationals. So these people think they're very patriotic and nationalistic by putting these bans. Bans are required when there is clear evidence of a concerted group of people trying to bring down prices of commodities or any equity. If there is a clear-cut cartel operating, most of the time the bans come just because the prices fall. Just because prices fall, it doesn't mean there is some cartel operating. Just if in the markets, like any markets for the matter, if you don't buy, You don't need to sell for the prices to come down. People forget that. The moment there is no buyer, then the price can reach any level. You don't need some sellers to bring it down. So SEBI or any other regulator will, in their own wisdom, try to do that. So we have to accept that as a part of the game. There's no point in criticizing beyond a point, because we are all players in this game, and I think we should let it go like that. As investors, we should not even bother about it. As traders, yes, we should be bothered, but they are God and we are all normal human beings. So that's life. This happens everywhere. So it's not only in India or something.
Yeah, thanks.
Yeah, thanks. Abhishek, would you push to DIY? DIY investing? Already spoken?
Hello, sir. Hello. Thank you for the opportunity. So I mean, it was an interesting perspective. Thanks all the speaker. Now, one thing that you mentioned that we should be on cash. So, now, given that we have some SIPs which are running, I mean, the mutual fund SIPs, for instance, which are running for a while now. So, what should we do with them? I mean, should we stop them temporarily? And that's the first question. Two, what would be the early indicators of resuming back to equity? I mean, because typically what happens with post-COVID also was, I mean, there were smart players who got in the bus early and then they made big money. And then once you get in late, the chances of you making it big, even though there was a big crash, is very low. So what would be the early indicators which actually would say that, okay, we can put the money back into equities? Thank you for this.
See, DIY, I am not a SEBI registered advisor. It's always nice to consult somebody, especially if you're doing SIP. People have different, time horizons. Depends on the age. For instance, I'm 60 plus, so I'm already 1 foot in the grave. So therefore, I'm much more careful than if you're just a 30-year-old person. So I really, I'm sorry, I am not able to give you a better piece of advice. How do I look at the market, when it has turned? Is one of the things I use for is 100-day moving average is what I look at. So if you look at 100-day moving average, it has generally worked for me. Even if you take, the last 2 years, 100-day moving average crossed around somewhere in September of 2020. So even if you miss the first 4 months, you're doubtful. 100-day moving average gave you a buy in June 2020. So I would certainly look for something like that. And if prices cross 100-day moving average, then I will think that the worst is over. So I didn't catch March 27. I didn't catch April. I didn't catch May. If I use 100 DMA, I would have caught in June. So I would like to use that as it is not a very, it's not foolproof, but certainly I would like to, use that. Like now I have been telling people that at 17,500 plus, I would think the the bull market has resumed. I would think so. Right now I'm thinking it's a bear market. I would think so, but it is not always. There could be whipsaws. We know that. But these are something you have to cling on to before you make a decision. You can't just keep on waiting also. So I am looking for the 100-day MA for me to think that the trend has changed. Of course, different people will use different methodologies. But this is how I am doing it. I hope you got your answer. May I request? Yeah.
Yes.
And thank you. Sorry.
One more follow-up on this. So, given that now that equity is not the, the preferred destination, but we still don't find gold actually rising up as it was earlier. I mean, whenever there was a fall in equities, gold used to have an exponential rise. Now, even that doesn't seem to be the case. So, people are even careful with gold.
Yeah. If I understood your son, instead of equity, what should you do? So I've been recommending gold for the last 2 weeks. I've been recommending silver and gold. Both ETFs are available. So one can get in and buy gold and silver. This is what I would do if right now I've not done it, but I have recommended it to various people. On my personal portfolio, I've not done, but I may want to look at it. And I will always believe one fallacy in the market, which all these gurus do, is where will you put your money if you don't put in equity? So it's better to remain in equity. Timing in the market is no good. Time in the market is good, and all that. those guys don't put their money. They have no skin in the game most of the time, and they are inexperienced in basics of how to trade in the market. I'm very sorry to say this, but as an elder person, this is what I need to tell. So I tell people that they have forgotten mathematics. There is zero is always better than negative. You take your money out, you have the money, right? So you may not earn any, let's say, interest on that or any return on that. So zero, that is right. But if you put in the equity market knowing fully well that it's very risky, then you will get a negative return. So you tell me either zero is better than negative or negative is better than zero. So this basic mathematics they forget, which we should have learned in whatever, second standard, third standard. And it's very nice to tell others, you do this, you do that. Tell me what you have done. This is what I have done. Is if they're able to tell that, then then their thinking, their advice will be completely different. Unfortunately, today we have people who only advisors who have no skin in the game in more often than not. So so I am recommending silver gold because I used to myself trade in that. Right now I'm not trading. So if I want to use, right now I am very scared. I'll tell you that. I am like a coward sitting here, very worried. So I just think, let me see what will happen in the next 15 days, 1 month, 2 months, and then I'll make a decision. So there is an old saying, that, you can be a bold trader or you can be an old trader, but there is never a bold old trader. So I'm an old trader. So right now I'm not bold. So youngsters can do whatever they want to, but I don't want to do it. I hope you got the answer on that. Anup, I think you've been waiting for a long time.
Yeah, thank you.
From the time which we started the discussion, I think with every passing minute, the US industries have been, they have been making lower lows. I just wanted to understand, is it like the situation which was there in 2008, something which happened in 2020, and because of so many automated trades going on, the intensity of fall and rise has increased a lot. And another observation which I have seen that whenever VIX crosses 30, just forget. And I believe people do take references of historical dates. So again, it was a March 2020, and again we are into March 2022. So are we expecting something near to that? And basically, and we see it is very difficult. Even I am 80% invested. I am having a portfolio of a net. I'm seeing a drawdown of around 9% as of today. So it will be very difficult for me to hedge as of now because. But the discussion which has happened over here, so I am convinced that wait for the March to end, and so I wanted to ask basically on the intensity part. Yeah.
See, Anup, these theories of cycles, people talk of there's an 8-year cycle in the market. I want to do a special spaces session on that, because I don't think these cycles, there is nothing like that, that there is an 8-year cycle or there is a 6-year cycle and all that. People say 92, 2000, 2008. So 2016, there should have been something happening. Nothing happened in 2016. So you take 8 years before 92, nothing happened. So now to say March 20 something happened, so 22 should happen. Okay, March 18 what happened? Nothing happened in March 18. March 16 what happened? March 16 market is very bullish. So there is nothing. See, I'm not a. I can only say I am a good student of market. Keep on studying these cycles. Anything you now say, give me something, I will go around and find out whether that has happened, not happened. So I do not believe that those things are. There is any relevance to that. And now, in terms of VIX, now does VIX lead the price or price lead the VIX? So I believe price leads the VIX. Somebody says no, VIX leads the price. So that is a never-ending debate. So I personally feel that everything you should test it. Whatever hypothesis you have, you should test it. Now coming back to this 2008 you are talking, right? 2008 and 2020, I believe, is like a flash crash. It happened within 3 weeks. It didn't take more than that. In 2008, the first crash happened. 30% it fell within 7 days. That is between January 15th to January 22nd or something. I don't have the data here, but by and large, from memory, I'm talking about. It fell about 30% within about 7 trading sessions. Then what happened? That is from 6,300, it fell to 4,400 or something, then bounced back to 5,200. And then it remained there for quite some time. Then it fell down to 4,500. Then it hung around. Then it was still 4,200 or something around September 17th, 18th of 2008. A few dates here and there it may be, but this is what from memory I'm talking about. So what happened? So if you look at from January 21st to September 23rd, those 9 months, the market was almost the same level if you really look at it like that in pure index. But then the next crash happened between September 23rd, even October 3rd, I think it was 4,100 or 4,080 or something like that.
Okay. Hello. Yeah.
Hello? Hello?
Yes, sir.
Yeah. Can you hear me?
Yes, sir. Now we can hear. There was a silent for about 50
Oh my
minutes,
God! Yeah,
50
yeah.
seconds.
No. Sorry, I don't know what I was speaking. I don't know what I said. Anyway, I was saying what happened in 2020 was a flash crash. What happened in 2008 was a two-time crash. One was in January and one was in October. And the two different reasons were there. October, you can say it was post Lehman 15 days. And I think a lot of, let's say, adjustments were going on between banks and institutions. So that's why this FI is pulled out. Now in the January was because the biggest operator of the market was bringing out his IPO and he was holding the market. And soon after the IPO, the market crashed. So they're completely two different crashes. And in January, when it crashed to 4,400 on January 21st or something, it was almost the same in October. October 2008, it was still at 40. September 2008, it was still at 4,300 or something. So effectively, it was sideways between January low and September high. After that, it crashed for 45%. So, and this VIX and price, I believe that price dictates VIX, but people say VIX dictates price. So I don't know which dictates what. I really don't bother too much about that relationship. I look at broader picture and then I make my assessment of what the market can do. I've been wrong enough number of times, but by and large, I've survived for 35 years, 32 years. So I'm hoping that I've been right more often than not. So that's what it is. Yeah. Yeah. Is there nationalist you want to speak?
Sure, sir. Sure. Thank you, sir, for giving me the opportunity. So I would like to thank all the speakers. A lot of great points. I got to hear. It added a lot of value. And I don't have a question, but I would just share my thought or my opinion. So one of the speakers said that the power demand has increased only by 1%. So now looking at the data, it's fine, but we also need to look at why we need to question. We need to, in corporate offices, we are taught, 5 whys. You keep asking questions until you reach to the root cause. So since I work in an environment where I can see that a lot of IT companies, the employees are working from home, and for another 1 or 2 years they're going to continue working from home. I have come across a lot of people who have taken permanent employment from home. So earlier these IT companies, they used to consume a lot of power because they used to work in a big buildings, multi-storied buildings. Every floor has an AC, every floor has lights and everything. So obviously because of the COVID, there has been an impact on the power demand. However, I can the way things are going at the bottom in the market, I'm pretty confident that this data of change in the demand of the power will change in another 10 months max. Multiple curfews, multiple industries working part time, they were not working at the full scale. So obviously the power demand has been less, but that does not mean that the overall ground level power consumption has reduced or it is limited. It is growing every single day, and every new home, if any person is buying, you can understand his consumption of the power is going to increase. It's not going to decrease. So that's one point. Second point, regarding this crash, I can understand with whatever is happening in the global scenario. I am not a technical person. I am completely, I work on the fundamentals, and I am not, too old in the market. I started in the market in 2007, actually investing, and I'm an investor. I'm not a trader at all. So purely from the perspective of an investor, I would say if you are a long-term investor, you should every dip, not entire amount, but you should invest some amount, if you have, because unless you are sure that tomorrow there is no company gonna work, the entire system is gonna collapse and we're gonna go back to the stone age, the stock market will remain there and it will go up. Yes, there will be downfall, there will be crashes, market नीचे आएगा. ऐसा नहीं है market नीचे नहीं आएगा, आएगा, but that is the opportunity. So for example, if I take my example, I don't invest my 100% in equity. I have funds, I have a bond fund, I have a hybrid fund, I have multi-cap fund, and every month, so let's say just for example, I have 1 lakh of cash with me right now to invest, just for an example. So if I don't find the opportunity कि अरे यार अभी मार्केट अच्छे लेवल पे नहीं है, या मुझे समझ में नहीं आ रहा, मुझे लग रहा है कि नहीं यार अभी बहुत ज्यादा हाई है, मार्केट शुड कूल ऑफ लिटिल बिट, थोड़ा करेक्ट होगा उसके बाद मैं खरीदूंगा. सो एवरी मंथ व्हाट आई डू इज 5% ऑफ व्हाट आई हैव, इफ देयर इज अ sovereign gold bond open available, I invest maximum from it varies between 1% to 5%. I will invest some amount in the sovereign gold bond. I don't go with the physical gold, but yes, it is always good to diversify your investment. So uh, now coming on to the this scenario of what is happening in this world, what I understand, India very smartly is taking a very diplomatic neutral position. In a free trade, in a free world where there are no sanctions, no restrictions, everything, all the trades which happen smoothly. There is a competition, there is a lot of negotiation, there is a margin pressure. But when sanctions are there, when people fight and people stop their resources, sharing their resources, the countries which remains neutral, or the companies who knows how to diplomatically steer through such situation, are always benefited. Now with India, the best two things what I feel it is good for India is, first, our internal consumption is itself very high, so we are not too much dependent on the export like China is. I feel that that today, I think just about 2 or 3 hours back, Boris Johnson, Prime Minister of UK, gave a statement that UK is not going to be part of this war. So I believe that if UK has backed out to go against Russia or to side with USA, I think most of the European countries will follow. In today's scenario, they cannot afford to cut off Russia completely because of the oil, the gas, the commodities, the metals. They cannot. A lot of countries are independent on each other. It's basically a big reset, which I believe which is happening right now, and this will happen for another maybe let's say 2 years max. And I still, from my gut feeling, I'm saying this from my gut feeling, I still feel that India is going to be that shining star in this entire scenario. And we should, every time we get an opportunity, every time there is a dip of, let's say, 300, 400 points in the Nifty, I try to deploy at least 10% or 15% of the cash holding which I have into the market. Else, let's say, when the market was high at 18,000, 18,300, to be very honest, I redeemed a lot of my mutual fund which I had invested some 4 5 years back. And now again, every correction, I'm putting a small amount of money back into the market.
Sir.
Yes.
Okay, let me just.
मैं मुझे बोलना था. Let me, Abhishek, 1 minute, just 1 minute. 1 minute. Mutual fund, equity, commodity, gold and Boris, वो जो यूके का प्राइम मिनिस्टर है, ये आप सब इतना सब कैसे मिक्स कर रहे हो सर? सिर्फ इतना बता दो मुझे. थैंक यू.
ओके, सो अगर आप अभी देखें तो क्या हल्ला चल रहा है कि न्यूक्लियर वॉर हो सकता है. ठीक है, न्यूक्लियर वॉर होने के क्या चांसेस है? अगर न्यूक्लियर वॉर होना होता तो अभी सिचुएशन बहुत ज्यादा एस्केलेट.
सर आप बात थोड़ा सा समझिए. रशिया सिर्फ ये कह रहा है कि भाई मेरे जितने भी पड़ोसी हैं उसके पास में आप न्यूक्लियर, यूरोप में भी न्यूक्लियर आर्म आप नहीं रखेंगे जो अमेरिका में बना है. पुतिन की स्टेटमेंट क्लियर है. क्या
मेरा अगर आप टाइमलाइन पढ़ेंगे सर, तो मैंने इस पे एक पोस्ट लिखा है जिसमें मैंने एक्सप्लेन किया है. इनफैक्ट अगर देखा जाए तो आई एम साइडिंग विद रशिया, टू बी वेरी ऑनेस्ट. मुझे लगता है रशिया जो कर रहा है वो ठीक कर रहा है. दिस द करंट क्राइसिस इट्स क्वाइट सिमिलर.
तांडव होगा या नहीं मार्केट में, हम उसको डिस्कस कर रहे हैं.
चलो सर, हम मुद्दे पे आते हैं.
थोड़ा सा
Abhishek, you would like to say something?
Yes sir. Let me just go ahead. I'll just take a couple of minutes, not too much. तो अभी मुद्दे की बात यह है कि to all the perma bulls out there, whoever think कि every dip is a buying opportunity, I would just like to give you one humble advice. अगर आप इस advice से बच गए, if you get saved from this, then दुआ में याद रखना. और अगर आप ऊपर चले गया मार्केट, तुम्हें को डांटना मत, ठीक है? वो इतना बस ये लगा के कर लेना. But this is the advice right now is, let us say you have 1 CR worth of net worth, okay? उसका 10% जो है वो आप लगाओगे इक्विटी में अभी के हिसाब से, तो वो 10% का 10% लगाना ये इस टाइम पे. तो let us say that you want to buy Reliance for ₹1 lakh, तो 1 lakh का अभी बस 10,000 रुपए लगाना, उससे ज्यादा लगाना मत. एंड प्लीज स्टिक टू, इवन इफ यू स्टिल वांट टू बाय द डिप, देन ओनली प्लीज स्टिक टू योर पमा बुल्स के लिए. हम तो पमा बुल है नहीं, हम तो सबको पमा बेर बोल के हमको चिल्लाते रहते हैं क्योंकि हम है ही परमा बेर, अब क्या करें. तो even if you want to buy something and buy the dip, just stick to the large caps, don't get into mid caps at all. A few stocks that you could think about, maybe something like a Reliance, something like L&T. These are the ones which have been evergreen, and they are very old companies, not very liable to failure in terms of balance sheet and all that. That is my 2 cents. Thank you.
Yeah, Abhishek, thanks. Nationalist sir, I appreciate you from where you're coming from. We appreciate contrarian views, and if it has worked for you, I think fantastic. And if people want to go by that route, it's also fantastic, because finally we are masters of our own fate. I appreciate it. Arjun, Suri, would you like to speak next? Oh, sorry, it was Mahavir. Sorry, Mahavir. Yeah.
So, sir, I'm a big fan of you. I always listen to your spaces and clubhouses. So,
thank you, sir.
The last speaker, nationalist, told that power consumption is going down because of the IT companies, employees have used the home, work from home facilities. So, for his information, I want to tell you that most of India's power consumption is consumed by the 5 top sectors which are belong to manufacturing companies. chemical, heavy machinery, and then steel and these types of companies have consumed most of the electricity in India. And yes, it's continuously going down. Power consumption is the very critical factor. And after that, I have one question from you. Like, I want your 2 cents that where we are heading, like for economic stance, like if,
Ma-
recession or
Mavir sir, thank you for being my friend. I mean, nothing. I'm just an ordinary guy. See, I have been very consistent in what I've been saying for the last 6, 7 months. I think we are in a stagflationary environment. I think RBI is making mistakes after mistakes after mistake. Anyway, nobody can question them. They will take their money and walk away, like the MD of NSE took her money and walked away. There is no
The
accountability.
Paytm one.
Yeah, the accountability is not there. So we cannot do much. We are in a playground where the rules are against us. So we still have to fight because we want to play the game. So I have been saying that we'll have a 20 to 30% drop in the mainline index and double of the drop in the mid and small cap. That means 40 to 60%. Many of the stocks have already happened. So sometimes it can go sideways and maybe drop another 20% also. So 80% drop is not unusual in a bear market for the mid and small caps. So it won't surprise me if some stocks drop even up to 80%. As far as the index is concerned, I was still thinking it's 20 to 30% because of considerations what I saw in the economy before the Ukraine issue came up. After seeing the Ukraine issue and after having studied it for whatever it's worth, about 4 hours per day, as I mentioned, I feel it may be more than 30% on the index also. But I don't want to make a guess because you see, it is a fluid situation, and I do not know all the moving parts. I am studying it every single day. After this session, also, I'll spend 1 hour trying to understand what is happening. So I'm that much interested. So if and when I get some clarity, I will certainly put it on my Twitter feed. And if you are following me on Twitter, you will get to know. I will not hesitate to do that. I have my clubhouse sessions every Sunday at 8:30, and you will hear me there. The spaces, I don't know when I'll come next because I'm very uncomfortable with the structure. Suddenly it goes off, and you don't know when it has gone, what is gone. So, but clubhouse, you can hear me every Sunday 8:30. You can read my views on the Twitter about my what I expect. My 2022 predictions have already put on 29th December itself on pinned tweet. And I mean, with God's grace, many of them have come. Of course, Ukraine is not there in that. So let us wait and watch. Why jump the gun? I think if you believe whatever I'm saying, there is some element of truth. Then I think we are headed down. How much? I don't know, but I think it will be more than 30%. Yeah. Thank you.
Just one advice: you should not try to catch a falling knife. That's it.
Correct. Yeah. So who else is there?
Can you repeat
Raj
that
is
last?
You should not try to catch a falling knife.
Okay,
Yeah, Abhishek,
thank you.
who is the next? Raj, is it? Yeah,
Yes.
Raj? Yeah, Raj.
Thank you for the opportunity, sir. So I just wanted to ask and clarify my doubt. So for the moment, keep all things aside, the technicals and all sort of things. Just what I noticed, see, everybody has been talking about 2008 and the Corona fall. What I have noticed in 2008, since we have witnessed a fall of October, afterwards the market regained in the span of year and a half. That is 1.5 years. It has regained with the same level. Okay, and in Corona period too, after a horrible fall, we saw a bull run and market regain in the span of 8 to 12 months. So if we see the pattern, if the market is falling and then the recovery is happening quicker. In 2008, it has recovered in 1.5 years. In 2020, it has recovered in 8 to 12 months. So just keeping all things aside, if we see another fall, what are the chances, or should we be really worried that, at any level, considering market will eventually regain its original level within no time of period? Is it
So
going
I
to
think we have
happen?
answered this
thank you.
question, right?
Yeah, thank you, Raj. I'll answer this question. Now, you specifically told me about this 2008 business. See, 2008, the peak was 63.50. Okay, in January. In 2010, November 4th, I think so, was close to 6,300. It didn't cross it. Then the next time it crossed was in 2014, just before the 2014 election. So if you really take 2008 to 2014, 6 years it remained there. 6 years. So it is not that 2008 it picked up and 2010 it went up. At best, you can say 2010 is a double top. But between 2010 to 2014 March to 2014, I think April, May, I think so, it was below 6,350. And I am talking of 1992 to 2004, 12 years it was stuck. So there is no rule that it has come back in in 2020. This is a very unique case, where in 1 year it has bounced back above the high itself. That has not happened in history, as far as I know. I am not able to recollect. So please don't think that it will come back quickly enough. It will. It is not possible. Sorry, it has not happened in the past. And in my understanding of the environment today, I doubt it will take. I think it will take more than 18 months, is what most people may be thinking. It will take much longer. This time, I think the grind will be a normal grind, which is about 6 years or 4 years. 4-year grind, I'll be surprised. I will not be surprised if it's a 4-year. In 2014, it was 6 years. This time it may be 4 years. So you may see this in 2025, you may see 18,600 by normal method. Let's say something new happens, which we are not aware. So then we will review it. Why should we bother about whether it will happen in 25 or it happened in 22? So let's play the game based on what we understand as of now, next month, following month. Let's take it a month by month rather than looking for making some prediction what will happen in 2025. I just gave you an example of 2025. I'm not saying it will happen in 2025. It may happen in 2022 as you are thinking, or it may happen in 2028 or 2033 when it has happened in 1991 to 92 to 2004, 12 years. So it may happen after 12 years. It may happen after 4 years. We don't know that. Let's go month by month. Right now, as Abhishek rightly said, don't catch a falling knife. Wait. At least I will wait.
All right.
So, yeah.
So
Somebody
now,
asked me
let's
about.
go to Navdeep,
One
right?
more question I wanted to ask.
No. Yeah. Just
Sorry, we're
one.
running out of time, Raj.
No problem. We'll take some more. We'll take some more time. It's okay. Just one thing. Somebody asked me about my opinion. See, I put in my opinion almost every day, not almost every day, on a Telegram channel, which some of my friends have forced me. A group of army officers have forced me to open a Telegram channel, and I'm a contributor there called Money Magnet. So you can see read my views there also. Money Magnet. It is called Money Magnet. Because these army officers wanted to set up a group. I'm from Sainik School, so for me it is as a part of the fraternity. I'm doing some work there, so you can have a look at that. Sorry, who is the next, Abhishek?
Navdeep.
So I wanted to ask one question, just a short question.
Yeah.
So apart from the technicals, what factors should be, what macro factors should we look into, like CPI or PMI index or interest rate, inflation?
I look at price. See, Bhavi Bhagwan, everybody talks of Bhava Bhagwan Che and all. Look at the price. Look at price, and I look at simple thing. Look at price and moving average. The moment it moves and trades above the 100-day moving average, I know the trend has changed for a intermediate / long term. So let it cross 100-day moving average. Then I will go and start buying in that particular security or the index, more the index, 100 DMA. So people may look at 50 DMA. I look at 100 DMA. I don't look at CPI. I don't look at other. See, all that will be factored in the price. Then why do we say price is God? If we say price is God, means what? It's factored everything there. So it will get factored if it goes to 17,700 or something like that. I feel then the market has turned to bullishness. And I'll start buying on all declines. VTFD, I'll do. Right now I'm doing SOS, which is sell on strength.
So macro factors are a little bit lagging factors, indicators.
Yeah, macro factors have to be lagging factors, will be lagging factors. Look at in 2020, no? Did you know that market will go up so much? Did you think that there will be a vaccine? Nobody knew. But the prices told you it wants to go up. Whereas we all felt it may not go up because of Corona and all that. So price only is the final arbiter, because after all we trade price, no, we don't trade fundamentals or we don't trade macro factors.
Yes, thank you.
Good evening. Good evening, Sanik sir.
Good evening.
Good evening, sir.
Good evening, Abhishek. Sir, I wanted to ask, the price movement in commodities is turning more and more bullish. What is happening in crude today? So, what is your reading like? Is it temporary because of geopolitical corrections, or you see it based on charts moving to much higher levels? Because on WTI crude, if level of 120 is crossed, I don't think it's stopping before 150. So that is something which is worrying me a lot. I thought I'll ask your opinions about it.
Thank you for that, Andy. See, I had pointed this out in my Twitter timeline about all the commodities about a month or a month ago, I suppose, much before we talked of Ukraine. See, in the commodity complex, like in our futures, in the derivatives, there are 28 commodities which are tracked by various broking houses now internationally. Out of the 20 commodities, there's something called backwardation. Now, backwardation means it is, it is at a discount. The future is trading at a discount to the spot. Now, if you are old enough, or if you have read history of the Indian stock exchanges, backwardation in India, we used to have Badla and Unda Badla. Badla is basically the future will be higher than the spot price. Unda Badla is where the future will be lower. Now, when Unda Badla is to come, will be when there is a huge short position in the market. Now, Unda Badla was utilized very well by Harshad Mehta and Dhirubhai Ambani when he trapped the bears. Dhirubhai Ambani trapped all these bears today who are considering themselves as value investors and big bulls and all that. They were all very big bears at that time, and he trapped them by creating this Unda Badla and demanding the delivery of the shares of Reliance. And they could not, and then they were forced to cover at extraordinarily high prices. The same thing, Harshad Mehta also did this for these so-called value investors and big bulls, where he trapped them by demanding shares. Now, the same thing is happening in commodities. 20 of the 28 commodities were in backwardation, which means there is no supply, but the demand is so huge. Now, you can say it is speculative, but you can say it may be genuine. We do not know that. So this 20 on 28 being in backwardation is a record. It has not happened. So I had put a chart also about a month and half, and I had said that people were talking of, I think crude was below 90 or something that time. People said, no, it will crash to 60s and 50s and all. I said, there is a huge position sitting in 100 and 100 and up to 125 for crude. So what will happen is when it reaches 100, then there is something called gamma squeeze, technically, basically, which means the fellows who are shorted now, they have to go double long. So that will push the crude to 105. Then at 105, some people are sitting. So you go to 110, 150. So up to 125, technically people were sitting. And the gamma squeeze was expected to first cross 9. It was, I told you about 80s, 88 or something. I was thinking it will go to 100 because the gamma squeeze will happen. Then it will go to 105. So both of the targets have come. So this gamma squeeze in oil I'm talking of, there are people sitting up to 125 is what I have read. Now, the different commodities, the same issue is there. If you look at the commodity index, the Reuters commodity index, it is not, there is no correction at all. Without correction, it is going. Generally, this kind of a gamma squeeze will make the commodities collapse after some time. It happened in a company called GameStop in US. You can go and see the chart. But it will kill everybody. It happened in oil in 2008. When the whole equity markets were down, oil went up from some 70 or 80 to 150. From 150, it collapsed to 40 within 4 months. So a gamma squeeze can take it to those levels. So I think gamma squeeze is certainly one issue. Second issue is, I don't know this Russian war, because Russia is also an exporter of commodities, agri-commodities like wheat and corn and sunflower oil and all that. If by chance this goes into a different orbit, then the demand itself will push the prices up. Demand itself. In 2008, the oil went up not because of demand, it went up because of gamma squeeze. The same ulta gamma squeeze we saw in April of 2020 when oil went into negative. You see, that is gamma squeeze, which took it there. People may give any other explanation. I'm telling you, a simple gamma squeeze. It is basically the guys who are long had to change their position. Here, the guys who are short have to change their position and go double long. There, they had to go double short. By the time it went to negative. So I don't know how long this will continue, but it is worthwhile to be very, very careful if you want to be short in commodities. I don't think this is an environment to be short because the prices have gone up. How much can they go up? How much can they go up is not a good question to ask in a roaring bull market, which the commodities currently are. It may collapse like GameStop. It may collapse like oil in 2008. It may shoot up like oil in 2020. But we don't know yet. Right now, you should be long commodities if you want to be. Otherwise, step aside.
Absolutely. I said I remember this thing, the gamma case which happened. So I was
Yeah,
short
Abhishek, I'm
some
not able to
oil.
hear you. Maybe
Now,
I'll take
Gulchu
psycho.
Bhaiya.
No, psycho me something is there. Psycho
Hi, can you
names.
hear me?
Yeah, psycho. I can hear you. We
Thank
can
you.
hear you.
I had a hypothetical question about geopolitics. In while Russia is busy fighting this war, what are the chances that conflict over Taiwan between US and China escalates? And in that scenario, will India be able to remain neutral or will it have to take a stance? And regardless of what it does, what is the economic outlook in a world where this is happening? Thank you.
Yeah, Psycho, I am. Really don't. I mean, I should not say that I'm any expert and all that. No, none of us are. But I have played this mental game about 15 days ago in my mind. There are three areas which are hot areas, if I may call it. One was this Ukraine, Russia, which I had thought that it will happen this way, and it has happened exactly what I thought. That is one point number one. The second spot I thought was very obvious, which is the China Taiwan. The third, which people are missing, is the Saudi Arabia and Syria. Yeah. So there also there is a conflict happening. Now, if Russia annexes Ukraine, I first thought they will annex those two border areas and then slowly come into Ukraine. But they have now changed their plan. This I did not know. I thought they will come from the back. That is, they'll take those two areas where the rebels are there and then slowly usurp Ukraine. But they have done upfront. China Taiwan is almost certainly next on the cards, and then the Saudi Arabia thing is the third one. Now, India, I think, in my opinion, has made a mistake of not supporting either of them, because both now we have enemies to both of them, because nobody likes neutrality. When you're fighting, everybody wants you to be on one side. That is my biggest fear, not from Russia per se. I'm worried about the Europe and US trying to sanction us in some indirect manner. So that is my fear, because now tomorrow when you go when you go for contracts or something, US and Europe may think that we are allying with Russia because we are not supported Ukraine. That is a problem when you take a neutral stand. I mean, I am really very concerned as to why we took a neutral stand. Whichever stand we should have taken, we should have taken firm. See, taking stand with Russia will not help us because they will not help us out with China. But taking against Russia will also mean that we will struggle because of our defense. 50% comes from we import from Russia. Now, coming to China, Taiwan, that's another different ballgame. Obviously, we will not support China. We may support Taiwan, or most likely we will remain neutral. See, India, unfortunately, by its foreign policy over years, and not only this government, any government, we are not, taking any firm stand. And firm stand not taking many times will go against us, in my opinion. Not my opinion, sorry, it has been shown by history. And this time it is very stark that, Ukrainians don't like us, they're harassing our students. Russians don't like us because we have done nothing for them. So both of them are unhappy at the end of the day. So I am very, so I don't see it like this. The moment you go on thinking those negative things, no, you will feel it's not worth living itself. So let me not go there. Let's take step by step. Let's worry about this. Then we'll worry about China. But let us.
Sorry, sir. I wasn't being negative. There's a company called RAND. It's the Research and Development.
Yeah, Rand Corporation. I know. Yeah, I know Rand Corporation. Yeah.
They had a 2016 report which strategized that if we have to take on China, then we need to neutralize Russia. And the way to do that is through NATO expansionism and pressurizing them into a war in Ukraine. At the same time, if you see last month, that overnight revolution in Kazakhstan, which connects China and Russia, their pro-US government came into power literally overnight. How the CIA has done in multiple countries. So I'm not claiming this to be true. I'm only asking what are the scenarios where a report like this, where they say that we will destabilize Russia, keep them busy at the Ukrainian border, and then we'll move on to the Taiwan issue to take on China alone, plays out.
See, I've studied extensively these kind of, the CIA, this RAND Corporation, how they go about destabilizing governments and all that. So anything is possible. Okay, if you have got to read the RAND report, it means it is no longer secret. So if you really go into history in the last 40 years after from Cold War, you will see America is behind every nefarious activities. So it's quite possible what you are saying, what Rand is saying, it's quite possible. But my limited point is right now, what is our goal? Tomorrow morning or next month or this one, how should we keep our investments? That is the purpose here of this room. It's limited only to that as of now. So I'm thinking that we should keep cash in also. We can certainly have one more room where we will discuss geopolitics only. Right now, this is my limited understanding, but I won't be surprised what you are saying can happen. It can happen. So Abhishek,
Yes, sir.
see, now we are at 11:30.
The
Another
last 10
15.
minutes.
Yeah, another, because we will not take any more people and speakers. We will definitely answer everybody's query and just close it off as quickly as
Yes,
possible.
sir. Yes, another 10 minutes.
But
10
we will
minutes.
answer them. I will answer them. I will answer.
Yeah, anyway, one good news for all the bears, whoever is carrying positions. 300 point नीचे है SGX, maybe tomorrow 500. Just kidding. And so next we have
Gujju Bhaiya. We'll take Gujju Bhaiya.
Yeah, Gujju Bhaiya, yes.
Yeah, good evening, sir.
Yeah, good evening, sir.
Actually, जो अभी commodity के price up हो रहे हैं, तो how do you say about the purchasing power? Because purchasing power is limited.
Correct. So that's why they will crash. Normally they'll crash. I gave an example of 2008. But before that, there will be a short squeeze. That's what we call the gamma squeeze. So I understand what you're saying. If there is no demand, how can the price be high? It will crash, but it will happen after some time. Before the price will go up first and crash. That because of the gamma squeeze. This is my understanding of the concept of gamma squeeze.
Yeah,
I take your point.
And other point which SK sir has said about the exposure of banks to the Russian companies, we can see truly about the same in the CAC and DEX futures. If you see, they are more down than the comparative US futures. So that's my observation. That's all.
Yeah. Thank you. Yeah. I agree with you. I see one more thing. We're all interconnected, right? We don't know who is having what positions where. I'm wondering why HDFC Bank is being beaten mercilessly. But there must be some connection somewhere, which we are not aware at this point of time. Only we'll come to know later. Yeah, it is there. Yeah. Thanks, Gujul.
Next, Gagan.
Sir, I want to ask from Sainik sir, what is his view regarding FMCG sector for now? Will it be sideways or in downtrend?
See, Gagan, ITC, for instance, uses your oil, no edible oil. Any edible oil, this one will have pressure. So it depends on how much they have imported, what is the contract, all that. So I feel by and large markets will be under pressure. FMCG is so much so it will be. That is why I am recommending caution. Keep cash. Don't do anything. Let's not try to extrapolate anything at this point of time. In the fog of war, as they say, you're not clear of whose strategy, what they're doing. So it's better to not look at investment in the conventional way. The unconventional way is to keep cash. So let's keep cash. We'll review it after a month.
Even market
Sir,
also needs to
sir,
short.
should we trim it, trim our position right now, or
Sir, I
we
am
should
not
watch
an
it?
advisor. I have told clearly, I have trimmed. I am not buying anything till April 1st, of April 1st week, because I'm very scared. And when I'm scared, I would rather keep my money safe. I don't want to venture. Just 2 weeks ago, I was willing to take a chance. Just 2-3 weeks ago. Today, I'm not willing to take a chance. I'll wait. Yeah, and I will trim if necessary, but I have already trimmed. So I don't have much to trim.
Okay, thanks a lot, sir.
Yeah, thanks. Yeah.
Okay, next, Arjun.
Yeah, we'll come back to Vinay last. Arjun. Yeah. Arjun is there? Arjun?
Okay, let's confused.
You go to Amit Raita.
Mr. Confused also there.
Yeah. Amit Raita, Mr. Confused. Vinay is the last.
Yeah, I want to ask a question.
Okay, Mr. Confused. No, one. Mr. Confused will take your call. Yeah, please speak.
Yeah. Don't you think that this Russia-Ukraine issue will be only for a short while? It will not last long, as Ukraine is not getting support from anywhere.
Mr. Confused, my assessment is Ukraine is getting support from everywhere. Okay, and everyone is putting their gun on Ukraine's shoulder and firing at Russia. Without them coming in, what they call the boots on the ground, the armed forces, when they come into a country to support, that is not happening. But otherwise, they're providing you with all arms and ammunition, including Switzerland and Germany have started doing that. So everybody is putting their gun on Ukraine's shoulders and firing. So now, how long it will last, as I said somewhere, that it will all depend on Putin. What Putin does, he will dictate the time of time of conflict, when it will end. It will not be Ukraine, it will not be US. It will be only Putin. Now, when I mentioned that, the meaning of that was, there are reports saying that the oligarchs, the people who supported Putin, they are trying to foment a rebellion among them so that, they will throw Putin out of power. Some people are talking of an assassination attempt. The US is capable of doing all this. So when I said Putin will decide, means that is what I mean. When I said it is not his decision as such, or his being there or not being there will decide the fate of the war. In my opinion, the way the structure of the war, war game is right now, it will be a long and dreary war if Putin survives. It will not be as simple as what people. No wars are small time, sir. No, it very rarely you get a short and sweet war. The last time we had a short and sweet war was in the 7-day war in 1967 between Israel against the entire Arab community. Even our Indo-Bangladesh war was a 14-day war. Kargil war stretched on for 2-3 months, and this is not a localized war. It is localized in terms of geography, but it is having the entire NATO and the the US and the UK against this one physically in terms of ammunition. And you've got a company like Singapore and Taiwan and all that, which are supporting it from, and Japan, which are supporting from outside. So it's almost like a world war in that sense, but not exactly a world war, but it is in that sense. It's a much bigger theater. It is not a small theater. It's like, so many people are fighting. Yeah.
Sanik sir.
Thank you very much.
Sanik sir, let me say something.
Yeah.
अभी ताइवान के ऊपर चाइना अटैक करेगा, सेम और वो फियर है जो जापानीज प्राइम मिनिस्टर है उसने एक्सप्रेस कर दिया है कि यूएस अपना स्टैंड क्लियर करे ताइवान के लिए, और ताइवान के लिए वो यूएस का जो डेलीगेट है वहां पहुंचा है, मगर उसके बावजूद भी अगर ये वार थोड़ा एक्सटेंड होता है और नाटो और यूरोप उसको सपोर्ट नहीं करता है यूक्रेन को, तो चाइना डेफिनेटली अटैक कर देगा ताइवान पे, और तब पिक्चर कॉम्प्लिकेट हो जाएगी.
Yeah, sir, I agree. So that's why I'm taking step by step. I don't want to personally. Many things are possible. So I mean, let's take it step by step. Why jump to any conclusion? Amit Raita, then invest something.
Yeah, hi,
Vinay will come to you last but not the least. Yeah.
Yeah, sir. Hi, good evening. My question was pertaining to the people who have been investing in equity for some few years now, and they have good positions. I mean to say, been investing in mutual funds or equity. They have a sizable amount of profits on their which they are able to see. Do you suggest them to put aside certain amount or trim the position at this level, or if it is long term, they should continue investing?
Amit, as I keep repeating, I am not a SEBI registered advisor. I am neither an advisor to anybody here. I have my own set of people, mentors, mentees whom I mentor. See, I can only tell you what I have done. I was keen to buy. I had a portfolio. I ruthlessly cut it to the bare minimum about 2 weeks ago. I was keen to buy more through a SIP, which I am not going to do. I am very scared. Wherever profits are there, I mean, of course, right now the profits are there. I mean, I booked the profits, and I will not buy anything till April first week. And if I were holding something, I would have trimmed. If I not trimmed, I'll trim tomorrow morning, whatever may be the case. And I will buy only when it crosses the 100 DMA in many cases. So this is what I would do. Now, each his own, as they say. Yeah, I know it's a very difficult way to answer the question, but this is the best way I could do it. E-invest or pound invest?
Penny
Okay.
wise, pound foolish.
Thank you.
Yeah, thanks, Amit. Yeah.
Yeah, SC invest.
See,
Yeah, thank you. Thank you. Good evening. Just a small question. Compared to commodity, what is your view on investment in IT? Will IT get affected because of the war? Thank you.
Very bearish on IT from January, sir. Okay, I think they have been written about it.
Yeah, I was just asking your view compared to commodities, which is volatile.
Yeah, I'm answering that. First, I'm answering that. So IT, I will not touch. Okay, I will not touch. Now, in equity, I can look at other than IT. I would look at individual stocks. I was telling you about ITC and S Bank and some pharma companies and Reliance, and there's so many stocks which you can look at. Coal India, which are. Why would I want to look at any particular sector? I would look at a stock, and that stock happens to be in that sector is a separate thing. You look at any great investor, sir. You look at Warren Buffett's portfolio. Look at anybody's portfolio. They don't do sector-wise investing. They do stock-wise investing. So if we all believe Warren Buffett is a great guy and we love to talk about his quotes and all, we should follow what he is doing. So I'm following Warren Buffett. Warren Buffett picks up stocks. I also want to pick up stocks. So I don't like IT simply because I think they're overpriced. Everybody is sitting in that, hiding in that, and I don't think they will show their performance. And I think IT will get affected because of this global problem. I mentioned also that Infosys has got a facility in Russia.
So I think the space is about to crash. It knows that we are all sleepy. Am I audible? Hello?
Yeah, we can hear you. Yeah, we can hear you. But I think Mr. Sani must have gone.
Again, I got thrown out. I don't know what you heard. As I said, in commodities, I'll buy gold and silver. I don't like IT. If you follow Warren Buffett, you should buy stocks. So I buy only stocks. They are across across sectors. I don't do sector-wise investing. Sir. It depends. People do sector-wise investing. I wouldn't want to do so. That's where.
Right.
Yeah, thank you.
Thank you.
So Vinay, we are the last. Vinay. Yeah.
Thank you, sir.
Yeah.
Sir, my views is if there's a possibility of nuclear attack, so in the sense the market can tank more than 20%.
Yeah, I heard you. So you are saying nuclear attack. I have no clue about nuclear attack, Vinay. I don't think we should even speculate about it. Very rarely any nuclear attacks have taken place in the history of the world, excepting what happened in 1945. Other than that, we have really not had a nuclear warfare till now. That is probably the reason why nobody is fighting face to face with Russia. Ukraine is not a nuclear country. So I think everybody knows that if they actually physically come into Ukraine territory, like the NATO comes into Ukraine territory, then it will become a nuclear war. That is also the reason why Ukraine is not being admitted to NATO, because once they get admission, then NATO has to come to their support. So I don't, at this point of time, I don't think there is any possibility of a nuclear war, because Ukraine is a non-nuclear state. And I doubt Putin is so stupid to put a nuclear bomb in Ukraine, because he can conquer Ukraine, which I think in all probability will happen in the next 15 days, the full Ukraine. So why would you want to do something like that? This is my understanding of the scenario. Yeah.
Sir, one last point, sir.
You are not clear. You are not clear. There's some problem with your phone. Yeah, tell me, Vinay.
The microphone.
Yeah. Vinay, I'm not able to hear you.
Is it okay, sir? Now?
Yeah.
So when the country is formed, by the time the agreements are made, like you should not have this kind of forces, you should not join to NATO and all. So there's no chance of the war situation now. So they have failed in that policy, I think. So what's your opinion on that?
Yeah, it's yeah. Now that's all past. No. Anyway, the title of this topic was Tandav, a market may Tandav. But anyway, you're asking me something which is slightly away from it. Right now, how will this conflict affect markets? I've already explained, and I think we should stick to those points. And we don't know what will happen, how long the war will last, but it will certainly affect the markets as long as the war lasts. So that will be my concluding comment. And may I thank every one of you who came here, who patiently was waiting for their turn, asked the questions. I'm really grateful. This is the first time I'm hosting such a thing, and I must thank Abhishek, who has been my co-host, and speakers like Options and Vinay, and listeners like Angel and Srinivas and Prashant. Thank you once again, and wishing a happy Shivratri once again. Let's tackle the markets tomorrow. Thank you, and good night. Abhishek, you want to say something?
Thank you, sir. Good night. Yes. Good night, everyone, and thanks everyone for attending. At one point, we had more than 500 listeners. Very honored to have that kind of an audience.
How much did you say?
And,
Sorry, how much did you say? I didn't even see numbers. Huh?
About 500.
500 plus. Okay, not bad.
Yeah. Good night, Sanik sir, Abhishek sir, everyone.
Yeah. Good night, sir. Yeah.
Good night. Good
Yeah.